See, let's get this party started.
Yes,
All right.
sir.
So again, how just sending warm welcomes to you all. My best wishes to you all and your families and your futures. All right, make sure this volume is down over here, so I won't have no feedback on YouTube. Um, and we kind of been getting back on track. When I say meaning we, meaning myself, and of course being able to be here with you all in our sessions and scenarios and mapping out our particular game plan of thought, of training, of the reiterance of knowing that everything we do still comes with a value of repetition, because we understand repetition becomes repertoire. Of course, that's one of our mantras over here. And we understand the importance of that, right? Because markets are, again, I always like to say, it's one big pattern, right? One big pattern, one big trend, and it can waver between that aspect of pattern trend. Obviously, if we're we're peaking, or we troughing, or we kind of somewhere in the middle, right? Shout out to everybody on the YouTube side again, guys. We got the live, going on the backside. You guys can follow along. Of course, we are in our Thursday training session, so for our family that's in the building here, we want to make sure we cater to their value here. And we love that you guys have feedback and offer a great interaction on the YouTube side. So if you do have some things that you might want to bring to the table, if you able to stick around a little bit, save them, or just post them in the back chats, we may get around to answering those at some point. All right, so as you guys can see, of course, on the screen, we're dealing with the infamous SPY, right? That seems to always be the catalyst of choice of thought when it comes to understanding risk, right? So today's topic, we're going to discuss assessing risk, right? Long versus short, and mapping out your money, right? The Fed hedge, right? Because how important is that, right? We all are aware of the economic backdrop of how politics work, or geopolitics work, right? When it comes to financial markets, of course, we are no spring chickens at understanding what we're up against, right? We know that this is a Keynesian marketplace, right? We discussed that a lot, right? We all know what a Keynesian marketplace is, right? So to make sure we keep that kind of energy on the table and remind it. Anybody want to jump out there and kind of give your descriptive value what a Keynesian marketplace is, right? What is a Keynesian marketplace? Anybody?
Isn't that like a marketplace controlled by the government?
Right, say that last part again, Oba. You was on it too.
Controlled by the government sentiment.
Right. Well, not just their sentiment, but by their what?
Their views.
Right. Their views. Right. That's kind of part of the sentiment, but also they got the power of the what? Of the hammer. Right. So that means they got what?
Monetary policy.
Right. Policy. They got power. Right. They got action. Right. They got the ability to affect your day-to-day life. Right.
Output, employment, and inflation. And
Right.
of total in the economy.
Correct. Right. Some of those kind of accoutrements within their reach, right, or their, I should say, their destruction. That sometimes, right, because it seems as if even though the party is still rocking, when I say the party is still rocking, when we look at the markets here again, just from a long-term perspective, we have realized since the COVID lows, we keep using it as the precursor, because we know that the market got a reset, literally got a reset on March 23rd. What do I mean by that? Right, when we say the market got a reset on March 23rd, what are we really saying at that moment? Anybody want to tackle that? What are we saying?
Reset in terms of we got a correction.
There you go.
All right, so we got a correction, right? And to the extent of, I would say the level of, if you want to even say the sell-off, right? Because the sell-off typically, I think it was no more than what, maybe, I think we mapped it out like 20, 30 some odd percent, somewhere around there, give or take. It was stop and drop within that course. All right, just kind of use as the scale here. We just use the short chart before we go to trading view. But we were somewhere around 338, 339 near the high, right? Before the whole COVID thing exploded. We came down and hit 218. Of course, I remember that number like yesterday, right? I know these numbers because I was sitting there mapping this stuff out. And I remember the day, literally that day on March, basically 23rd, it was 21st, 23rd, when the Fed had announced that they were going to bring out the bazooka, right? This is the talking points we had got preceding that from CNBC, Fox Business News, Bloomberg, Yahoo Finance, all the, the financial pundits out there. Everybody was kind of, amping up the idea that the Fed was going to bring out the bazooka, right? The helicopter money, right? You've heard that terminology before, right? Helicopter money, which is an old terminology, mind you.
Yes.
Right? It kind of goes in hand with the whole quantitative easing conversation and discussion, how, the central banks in unison to that of who? The regular banks, right? The financial lenders, even with some of the policymakers, right? They all kind of, join hands, so to speak, right? And Treasury pretty much says, hey, Federal Reserve, you have control of, somewhat backstopping this egregious, economic situation that we have in front of us, right? It gives them more power than they naturally would have. So quantitative easing is a part of that as well, right? Some of you guys probably familiar with that. We've pretty much been in a quantitative easing cycle since the subprime lending crash, right? 2007, 2008, 2009 base. We've been quantitatively easing ever since, right? They have not stopped. Mind you, they have not stopped one time. The markets have been constantly being, liquefied by the Federal Reserve, and their monetary policy. Some of it, in front of the house, some of the stuff been happening behind the scene, and they're just constantly just pumping money.
Yeah.
Right, right. You know what I'm saying? They the Tony Montanas of the of economic situation, so to speak, right? And surprisingly so, of course, when you think about the quality or the way of life, where you would think that level of liquidity that they're pumping into the markets by diluting literally the taxpayers' value or worth by printing excessively or recycling even some of that printed money, not necessarily even what they call the same way. Like if you guys are in the crypto space, you guys know when they burn, do a burn, right? When they do a burn, basically what they're doing, they're reducing the amount of tokens that they have in surplus, right? That means when they burn them, that means they can't be reused ever again. They're gone. They're non-existent, right? That's not what we're getting. We're getting recycled money and printed money on top of that, right? So because of that, of course, when we look at the market again, just going back on, just doing a small little history recon here to show you the extent of this, right? Now we're going back to 2008 again, subprime lending crash. See, there's our crash there on the backside of 2007, right? We pull back, and again, looking at that from that point, they say we was at 147 at that point, right? We pull back down to roughly around 67, 68 bucks, right? So roughly you say to yourself, okay, we dropped, roughly around about what? 70, 80 points, somewhere around there.
Yeah.
Right. Give or take there. So if you do the math on that, somebody would say, okay, that's roughly close to around about what? 50%, right? On that drop, right?
Absolutely.
Right? So we'll say 50% drop in this perspective, right? So just on GP real quick. Again, tonight's topic again is assessing risk, long versus short, mapping out your money, right? The Fed hedge. So that was a 50% drop during the subprime lending crash. 50%, right? Now, technically, as you can see down there with the years down here, this is 09, right? We kind of crest and bottom out right at, right at the beginning of 2009, right? And then in came what? The money printer, right? At that time, we was dealing with Ben Bernanke, the likes of who else was what was forgot her name. It might come to me, the Secretary of Treasury at that point. Anyway, they were very accommodative to the ideal of being able to want to bail out these financial institutions, right? Notably so, of course, we know about the name. Say again?
Hank Paulson.
Was it Hank Paulson at that time? 2009?
Yeah.
And then after him, I think it was no, before
Tim.
him, it was Tim.
No, Tim was after. I don't know. It was Janet Yellen before.
Janet Reno. What? No, we had Reno. Reno was who? She was the treasury doing. Gosh, I want to say man. I'm about to get my names mixed up.
You're right. Yeah, I know. Yeah, you're right.
Was it Reno? I could be wrong. I have to go back and do it. Some of these names get fuzzy. I went through some of them so many times, going through books and just risk history. Period. But for what it's worth in terms of that, we saw something unique that America as a institution, we say corporation because America is a corporation. Let's not get it twisted. We are a financial, warriors in this space now. So we need to start speaking of this, in the essence of the intent in which they are represented, right? And this country is represented as a corporation, right? Yeah, we know we live here, we got family here, we got our best friends and all that stuff, but it's still a business. It's a big old corporation, right? And within this corporation, there are major players and operatives that bring value to the ideal of the corporation in terms of its growth status, right? And we know since 1970s, right, we've been off the gold standard. America's sort of pretty much been leading the roost in terms of the federal, or not necessarily the federal, but the U.S. world reserve currency, right? Everybody's kind of more inept to want to deal with the USD dollar than that of, the pound, all these different rupees, whatever, liras, whatever, the set, whatever, y'all get it, all these different currencies. So in doing so, what happens is, if people buy our dollars, right, they're more inclined to also want to buy our debt because they feel like our money is protected, right? In doing so with that as well, it has been able to kind of somewhat reassure that our bonds will stay somewhat, I guess within the window of risk value that they can assess thoroughly to that of their own, right? They buy their own too, but they definitely want to trust. They trust the house more than anybody else for whatever that's worth, whatever. But in saying that again, that gave a lot of the policymakers, again, your Secretary of Treasury, of course, your Federal Reserve is a branch, or it's not even actually a part of the government. We know that, of course. I got to keep saying that sometime though. But it's this ancillary aspect, private business, right? Basically, what it is that has control literally over, employment, sometimes natural disaster values and things of being able to kind of liquefy certain aspects of markets that affect, the day-to-day living of average American in terms of commodities, right? The things that you eat, the things you build your house with, et cetera, you build your cars with, et cetera, those things, right? So in using their power, the extent of their power, they've been now on a basically since 2009, 2021 now, how many years is that? That's well over what? About 12, 13 years, somewhere around there, give or take of just, say again, somebody breaking up.
12 years.
About 12 years. 12 years of liquefying the markets. Couldn't make this stuff up, right? We're not making this stuff up, right? And you can see that by the extent of the market here since we had that subprime lending crash 2008, 2009, right? Obviously, it kind of, got brewed up in 2007 like it always does. Then, things happen. In that case, because it was more of a paper crash, right? Bad paper, as they call it, right? Mortgages and all that. Unlike the Black Swan event that we got with COVID, that just came out of nowhere, right? It hit everybody, right? They literally had about a 2 to 3 month window to prepare. By the time the data began to really catch up with the idea of how fast this virus was spreading, it was almost uncertainty that, it was going to catch financial markets off guard. Unlike the subprime lending crash, they knew this stuff was happening. Lehman Brothers, Merrill Lynch, they were just holding all this bad paper down. They subsidiary line holders, and they just act like it was no big deal. They just collecting all this collateral, all this cash, and they just pretty much sold Americans out right up the stream, so to speak. And okay, of course, in that came Chris Dodd. Y'all guys familiar with that? The whole banking scenario, how they tighten down on banks, right? The guy in Connecticut. And from there, again, they began to reassess how we would never put ourselves in that situation again, right? So they began to divvy out a lot of that power away from the congressmen, and they put more control in the hands of the Federal Reserve, right? And they figured out that, at that point we were, I don't know what the national debt was, but just hypothetically saying, let's say we were in 2009, we can pull up and find out for sure, but let's just say we was at around 18 trillion, somewhere around there, give or take, somewhere around there, 17, 15 trillion. And so the idea that the Feds has a particular balance sheet that they have to work with too, they begin to just say, okay, well, if that's the case, we're going to maximize our purse as much as we can to our ability. And going back to the point where we're just, using this as a case study to understand the value of when you start to assess risk, right? Long versus short, mapping out your money, right? That's the whole goal of what we're trying to accomplish here as investors and traders, right? First and foremost, we want to be able to put a timeline on our money. where we can see that it has a beneficial growth story behind it based on the rules of engagement, as we like to say a lot on here, right? Market conditions, geopolitical risks, innovative values that coming out, new companies, this, that, and the third. Everything that we're dealing with, even on the liability side, dealing with inflation and this, unemployment and whatever, right? But we do understand that the best game in town has always been, I repeat, the best game in town has always been equity markets, right? Now, we know real estate has its moments and it has its spurts when it's doing phenomenal. And then it has its time when it kind of it kind of just goes sideways and stays in in an iron condor situation, right? Neutrality, right? But on a day-to-day basis, right, we know a lot of people don't have access to the real estate market. Why? Because you need license, right? You need people to vouch for you, right? Even if you're doing a bird dog scenario, right? You still need to have somebody that has brokerage scenarios that can really facilitate a deal, right? Right now, today is even more easy, right? Because I think Oprah Chris, he a part of a company where he could just do it by way of his Instagram post and Facebook, just by advertisement, right? He can get a piece off that. But on the most part, you have to, again, be initiated, so to speak. And the investing world is the only turnkey operative value that you can just walk into it literally the next day after someone telling you about it, right? As long as you got a way to fund your account, supply it with cash or whatever you need, you can literally open up a business, online business, and start working the next day. And you'll have the likes of Apple and Facebook and Google, or Meta, right? Meta now, the Meta platform, right? Amazon and NVIDIA and Tesla. You have all these companies at your disposal, literally at your disposal, that you can access, right? And it doesn't require, the things that we always say, education, doesn't require licenses and credit scores and all this. None of that stuff matters here, right? No ethics. This is not an ethics, pre-screening scenario. None of that stuff matters here, right? So for me, it seems almost as if it's like, this is why a lot of our people, and I say our people in this perspective, how we've yet to even kind of embark on the ideal, at least, assessing some of our monetary value and saying, okay, let me add to this, this value here, as opposed to just leaving it in the banks all the time, but just, working hard, giving it all to the bill collectors, and then spending the rest on emotional highs, whatever, to each his own. But at some point, we're gonna have to start realizing the power of assessing risk properly, right? An investment value that has the potential to grow interest for you, that's a good risk assessment. I'm pretty sure everybody would agree with that, right? Right? That's a good risk assessment. Why? Because number one, you're not doing the heavy lifting physically, right? You allow your money to do the heavy lifting for you, right? By way of some of the same products, businesses, whatever that you frequent daily, monthly, annually, whatever, quarterly, that seems to be a no-brainer. But a lot of people are still kind of timid. They're tepid about the idea of wanting to do it. They feel like, again, you have to have some kind of level of distinct, education or whatever it is. I don't know what it is. But a lot of it is just inherent fear, right? Because they haven't really understood the value of assessing risk properly, right? And mapping out their money, right? Because you hear about people who've been working, I don't know, 15 years on a job, and the company might even have stock options, and the person may even relinquish their right to even have part of that through a 401k, because they maybe just don't understand the value. Or they're like, well, I don't want to leave my money to, in the hands of these people, so I might quit tomorrow, right? You've been there like 15 years already, Joe. Like seriously. But that's a part of the ideal of the education, or the lack thereof. So for us, we have to become more astute to learning how to, assess risk thoroughly, right? And I'm going somewhere with this, as I always do. There's a method of my madness, right? Because it leads into what we're dealing with today in our current scenario, right? The fact that we knew coming into particularly this week, right? We were saving that bacon, right? We were saving that bacon, right? We were saving that bacon, meaning we was waiting on the Federal Reserve to come out, pretty much let us know they was going to taper, right? We already had mapped this out. It's like, okay, mid-November, we're going to get the first taper, right? We already kind of assessed the number, 15 billion. We were right in exact, right? They didn't alter it, change it, none. They came out 15 billion, right? Now, a drop in the bucket in terms of 120 billion. So basically, that still leaves $105 billion worth of liquidity injection that's still going into the markets. Now, mind you, the market's already been in training wheel mode, right? Since the reverse repo operation that happened back in 2018 or 2019, excuse me, was it 2018, 2019, I believe, right? And when they kicked that in, on top of the quantitative easing that was still happening behind the scenes that happened since 2008. So they got all this liquidity just circulating in and around the markets, and no one has a clue about it. Why? Because a lot of these things are hush hush to people who are not initiated, who don't understand monetary policy, who don't understand the Federal Reserve, who don't even know how to go check and figure out where that stuff is at, because it's supposed to be public record, which it is to a degree. I'm gonna say to a degree because there's certain conversations that are off the record, like with the CEO of BlackRock and JP Morgan. They discuss certain things, and these are the same people that are being a part of the auction block scenarios that do a lot of the bond auctions or the reverse repo operation counterpart auctions, and they have all this firsthand information. So when they relinquish their bonds to the Fed in exchange for cash, because that's what happened when they do a reverse repo operation, right? That's what a reverse repo operation is. Banks that hold bonds, they pretty much sell their bonds somewhat on a consignment to the Feds. The Feds holds those bonds as collateral. In exchange, the Feds give those banks cash, right? They have the reserve liquidity cash, and those banks do what with that money? Lend it out to you all? Do it just sit in the vault? Or do you think they do something else with it? What do you think the banks do with all that money that they get from the Feds? And this happens daily. Now, go ahead.
No, I was gonna say they reinvested.
They're reinvesting it 100%.
Loans.
Right? To a degree, loans, right? I got to say to a degree, loans, right? Because right now, even the equity market side on the loan side is still a little kind of still iffy, right? Because credit scenarios like that, right? The whole idea of the credit swaps and all this stuff, and the idea of that we're already overly leveraged in credit. And so a lot of that banks are still kind of being finicky, right? Like they've always been, right? They pre-screening people extra hard, right? Right? All that kind of stuff like that. And in between time, they're taking that cash and they're doing what with it? They're going to take it to the most easiest market that they have available to them or allotted to them. That's what?
Equities.
Equities, right? They're buying assets, 100%, right? That's how this game works. So when people like, well, the Fed ain't necessarily buying the market. Well, actually they are. Why? Because these guys are under what they call a policy mandate by the Feds that chooses these certain specific banks that they deal with faulted counterparties to take bonds from, because they are some of the biggest bond holders obviously in our economy. Right? The usual names that you guys probably know, right? And in exchange, those guys taking that money going what? Ramping up their what? Their investment portfolio and trade values, right? Long as they meet the same value to be able to return it back to the Feds when the Fed comes for it. At the end of the day, again, imagine if like right now, case in point, real quick. Let's do this off the script a little bit, but on the script. Let's run over here really quick. Let's do this like really quickly here. Let me get off this ink pen here. Sorry about that. Right here. Sets and risk, right? Today's operation, 73 counterparts, as you see here on the screen, right? This is the market dashboard, the New York, Federal Reserve side that pretty much deals with a lot of the money, right? Especially with the reverse repo operation like that. The St. Louis Fed pretty much deal with a lot of the day-to-day action, deals with, around housing and a lot of kind of sensor type, data points, around the economy. Right? This is just straight the bank over here on the New York side of things, right? They dealing strictly with cash and cash flow, right? So today, fixed auction, right? Scenario in this case right here coming out of Thursday. This is the one for tomorrow, actually, going into tomorrow, right? Another $1.3 trillion, right? $1.3 trillion. This is the part of the market that people are not talking about. Why? Because they get lost in the mortgage-backed lending loans, right? The mortgage-backed security, excuse me, right? Or the treasury bond purchases that the Fed is doing, right? That $120 billion, they get caught up in that. Make sense? Because that becomes the talking point that all CNBC wants to talk about, Bloomberg, Fox, all of them. They're going to keep putting emphasis on that. But if you listen to yesterday's Jerome Powell's conference that he gave from the FOMC meeting, right? The Federal Open Market Committee speech that he gave, if you listen intently, right? Again, y'all know how we do it. We listen with the intent to listen, right? To hear, not just to respond, right? We want to make sure we listen because there's always some slip up or some, they get, run off at the mouth a little too much, and then they pretty much off script. It brings value to why, you guys are, starting to realize now exactly how one should be able to assess risk in markets based upon the level of giving nature of Federal Reserve values, right? Or their staunchness to want to do so, right? We do know that Jerome Powell has a history of being ultra dovish, right? When we say he's ultra dovish, that basically means he's what? What does it mean when we say he's ultra dovish? Anybody understand the value of dovish and hawkish Federal Reserve temperaments, right? So when they say they're dovish, we just think about what a dove is, right? Dove is what? Peaceful and very, accommodative and careful and concerned, right? When you're hawkish, that means you're aggressive, right? You're kind of, very, blatant in your ideology or your policy value. And in this case, if the man that controls the money has that level of power, than that of more even than that of the president, mind you, he has more power than the president. Right? Literally on paper. When I say by that, I mean, but fiat currency paper, right? Think about it. He who controls the money got everybody by the, whatever. And they're just a subsidiary, of course, to that of the Treasury, right? Whatever. However, but they're the ones doing the day-to-day action, right? So in this case, his conversation, his tone, he was very dovish in essence to not want to upset those who've been in this market again since the inception of our latest quantitative easing dispatch that came off the back of the subprime lending crash 2008-2009, where the market has been on this literally a 12-year bull run. And you ask yourself, because we have this little thing we do where we say, what were you doing in 2008, 2009, right? What were you doing in that time in your life? Right. For the most part, someone might be like, well, I was blah, 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 right? Well, I was this, that, and third. So let's go back to the chart really quick. So again, at that time, a lot of you guys probably had a little money, right? Doing a little something if you wasn't in school, some whatever. Again, the market was at the low of the subprime lending crash, was like $68, somewhere around there, give or take. And today it's at $467 a share. That's 12 years. Just on a percentage gain, if you do the math on that, how many times does 68 go into 466? Right? It's close to what? By 8 times, right? 6 times 8 is what? 48? Somewhere around there? If I'm not mistaken, my math right. So you can say the market is up literally near 700+% in 12 years. Right? Now do the math on that, and you break that down, in that perspective, that's rough around about what? Give or take about 60, 70%, something like that. Give it around about 60 some odd percent per annual basis in terms of interest value growth. That's phenomenal return. That's a phenomenal return. That's roughly, again, we're talking about 60%, right, on your money. 60% return, right? ROI, right? On a yearly basis, right? On an annual basis, right? We just put annual, right? That's a great return.
Excellent.
Excellent return. Again, show me where you can get a 60% every year on anything. With that level of, value, growth ahead of it itself based upon the fact that all these building block companies that make up the market, of course, the products that you guys use every day, right? All right, your Kraft Heinz, right? Your little tomato and cheese and all in your refrigerator, right? Right, all this little stuff you got hanging around the house is probably publicly traded, right? That make up the market, right? The Coca-Cola that a lot of people drinking, right? I saw something the other day, people down here in Mexico, some little town in Mexico where people are addicted to Coca-Cola is causing diabetes at high levels. I was like, wow, right? Coca-Cola ain't got no chill. So there's more sugar in the drinks in Mexico than it is the ones in America, because Americans don't play that. So these people down there addicted, they got diabetes, like everybody got diabetes down in this little Mexican town. I just saw that, I'm just phenomenal by it. I was just blown away by it. But I'm just saying, that's the power of business, right? Businesses don't really move on the ethical side of things. They're just saying, how many units can we move? So as an investor, we have to realize that this is a part of us as well. When you put on your big boy executive pants and your big girl executive pants, we have to relinquish our emotion. You have to put your emotions on the side. Now, there are investments that you can get in that cater to your emotional scenario, the interest values, like ESG, right? Environmental social governance, right? There's stocks for LGBTQ. Y'all know all this stuff on the back end, but y'all get it. There's stocks for everybody out there, right? Clean energy. So there's something out there that you can get invested in that has potential growth, story. It may not equate to that of a Tesla, right? But it still has value of growth, right? It still beats your money market account. So using this as a way to assess risk going forward, right? Which is the topic again tonight, assessing risk, right? Long versus short, right? Now on a long scale, this is 12 years. That's a 12-year risk assessment, right? We'll just put, RA for risk assessment. That's 6%. Now, of course, it's in hindsight, right? Well, people don't know what's going to happen from one year to the next. When you're in the midst of it, right? Granted, but there lies where we all come together and say, well, that's a part of our financial education of understanding how to keep up with what, with market values, right? With innovative values and companies that are coming out. Just again, you live in the belly of the so-called, of the corporation that handles the world's, greatest mass flow of what? Of revenue. Again, we have the biggest exchanges on the market in the NYSE and the NASDAQ, right? We're dealing with well over $27 trillion, right? I saw a stat the other day where they're saying that as of today, far as market value, I think that, the from the retail participants to that of some of the most, the basic people, like lower level fund managers like that, they were saying that at least $17 trillion is held in the pockets of those people, meaning you, me, and a few lower level hedge funds. That's not before you get to the big institution. We controlling 17 trillion right now in the markets. Let that marinate. Right? That's pretty much, look, you couldn't make this stuff up. That's a lot of money. Right? And a lot of that, came off the back of COVID because some people ran to the market because they had no other choice. They had no other means of income, whatever, right? And good for them because they need to realize now that the power of their investment value is going to be dictated on they learn how to assess risk and not being so scared to put their money where their mouth at, literally, right? Because who wants to be working forever, right? And knowing that they're being underpaid, undervalued, underappreciated, right? At some point, you got to have what they call a stop loss on that too, right? Not at the 20-year mark, right? I'm just saying, ain't no wrong work for 20 years, but if you're going to work 20 years for a corporation or a company, you best darn well have other streams of income coming in too. There's no such thing as all eggs in one basket, not in this day and age, right? So assessing that risk is vital for your growth. Again, that's about 6% on 12 years. Now, if I was to ask you all right now, anybody, back chat, YouTube, of course, everybody that's inside the Zoom right here, the Zoom meeting, do you think the market, let's say hypothetically, over the next 12 years, gonna give you a negative return over that 12-year stint? Meaning we're at the peak now. We've peaked. There's no more parties. There's no more punch bowl. There's nothing else. It's just from here, it's downhill from the rest, from here on out in terms of our. Do anybody think that by any chance? Anybody?
Would you say in the next 12 years, we think the market's going to plummet?
Right, dude, that it will return a zero, ROI.
Not a chance.
Right.
Like you said before, we're living in a Keynesian market.
And you know what? And that's weird because even the extent of this Keynesian market, because of course we know with COVID, that's when they gave the Fed all this extra power, even some of these unconstitutional. We spoke about that before, right? Another story for another day. But let's, again, going way back, we're doing a little history lesson here, going back as far as 2008, 2009, when they had that, that first, taste of that real power, right? When they say, okay, hey, you guys got it, fix this, right? And they haven't stopped since. And I can show you exactly what I mean by that, just by the ideal of how you can tell how markets have reacted. Okay, let's go a little further, right? All right, let's go back to 1998, right? right? 1998, because we had some little problems in between there, 1992, 1998. Then it got better. When Clinton came off, we had a surplus, all that, yada this, yada that, right? If you look at the drawdowns at the time, let's say 2001, right? Even 2000, 2001, of course, that was all a big hoopla, right? Right? Y2K, right? Everything gonna crash and burn. The world gonna come to an end. Whatever, right? Right? Whatever, right? And then we had, issues with what was it, 9/11, right? That was pretty much, the beginning of the years or the decade, so to speak, right? Okay. Fast forward again. Where are we now? Right? We had a pullback there from 147. Literally, we double top. Look at that. 2001 to 2000 and literally 2000 and 2008. We double top. We was at 147. We pulled back, hit 77, gained all that back basically from 2002 to 2008. We gained all that back. So basically around 100%. Right? We went from 70 something, back up to that's 100% in basically what 7-8 years, right? Still not bad, right? So you roughly around about what, roughly about 12, 14, 15% per year, right? That's still not a bad return. Keep in mind, 15% on an annual basis is still wicked. That's a wicked return. Then your money is sitting in the bank collecting dust. So if you got 100 racks in your bank account, 15% on that 100,000 is what? Right? That's 15,000. Right? Annually. No, mind you, that's annually. So the next year you got, obviously more than 115,000 because you got the principal value compound interest. Y'all get it, right? But again, I'm just using it as a case study, right? So from that point, even when we had that pullback, then the market was kind of, checking along to the upside. Then you can clearly see that there, right? And then we pulled back because the whole 9/11 thing. We regroup, we pulled back again, went a little lower than it was in 2001. And ever since, everything from that point on been lifted out. Look at that chart stretching up from where it's at now. I mean, you couldn't make this stuff up. That right there just seems unreal. So you're literally, again, from $60, $68, $70 to the 466, 470, 67 now, 12 years later. It's just unheard of. And I'm saying that to say this. Why? Do you think, each and every one of you, do you think that now these people figured out how to control market value, how to control the market period, how to subdue volatility, which is basically their nemesis, right? They love killing the volatility in this because that brings in a lot of uncertainty, right? Capitulation, stuff like that happens when volatility kicks in. People get nervous, right? They figured out how to subdue that. See, they're learning too. This is just not like they're just throwing, darts in the dark, right? Hoping to hit the dartboard. They're learning too. They're getting smarter. And in doing so, they figured out now how to literally keep markets somewhere on cruise control, no matter the events that are happening around the world. We dealt with what? Hurricanes, natural disasters. We dealt with bad economic policies. Again, COVID, a global pandemic. It only brought the market down, about 30 some plus %, and then rocketed from there. Again, as you see there to here, right? And then from there, we went on to, produce well over near 140 some odd %, close to that, give or take, 120, 30%, somewhere around there. Now, keep in mind, this latest move happened every bit of what? About a year and 8, 9 months? So you already up 120 some odd % plus in a year and 9 months. Now that's because, again, accommodative policy, whatever, right? But we realized, again, a lot of that money that people was getting excited about when they kept hearing the Democrats and Republicans speak about what? Are we going to, help, the American people out? We're going to do this, that, and the third. We're going to try to find a way to make, build back America great again and make America great again, all their terminology, right? But who do they really build back up? Who do they cater to? When I say who, meaning the people that was in control of doling out the money, the cash flow, who did they take care of? Did they take care of the everyday mom and pop person? Did they, homeboys down, the block? I'm asking that question too, generally. Who do they take care of?
Big businesses.
all day, every day,
Themselves.
literally, because they've been investing and trading in the market the same way like the average retail trader. I mean, look at Nancy Pelosi's portfolio, right? Her husband is an investor. You couldn't make this stuff up. A lot of them got, look, extensive investments. So to that extent, do you really think they're gonna really browbeat the people who are in control of the money if they're gaining from it financially too? Unless they do something just egregiously outright blatant that you have to reprimand them for, do you really think they care about raising the law at the SEC about certain aspects of you feel like the market is just completely, bat crap crazy? Do you think they care? Obviously not. So the name of the game is what? Asset ownership. They're the first ones to get bailed out, not the people who are going to foot the bill, which is the taxpayers and the future generations that have to take on the debt that we're leaving behind. So again, tonight's this top topic, as I will repeat a lot of times tonight, it's about assessing risk, long versus short, mapping out your money, understanding the value of the Fed hedge. You're not going to be able to beat market values at this status, right? Because literally it encompasses all aspects of business. Yep, even real estate, right? From the real estate guys out there and women. Yes, even real estate, the REITs as they call them, right? Because that market's all over the place. What just happened to Zillow the other day? They got ethered. We dropped that news on Zillow a week or two prior before that happened. Remember we dropped that article about Zillow is in trouble now because they took on more than they could basically chew. And I'm paraphrasing. They got in the business of buying houses. That was never their forte. They was in the business facilitating deals to get people into houses, not taking on that on their balance sheet. They overly leveraged. They thought they was going to move these units very fast because of the housing crunch kickoff that happened because low interest rate lured people in to want to move out of these metropolitan cities to buy houses out, away from everybody else to get away from COVID. That little rush happened really quick, then it subsided. Then people start realizing, okay, I got to start planning for, if this COVID stuff going to last longer than it was. And they began to say, oh, whoa, pull back a little bit. So they had a surplus of homes that they were just sitting on and couldn't even sell. Imagine that. And now they came out the other day when these earnings released, pretty much made it all, but we're not buying houses again, right? We're not going to make them. The stock dropped well over 27%, they're 30%. Shout out to everybody that bought those puts, right? We telegraphed it, literally. We got the articles to prove. We telegraphed it. We spoke about it a little bit too. But yeah, they're in trouble. Matter of fact, I think we spoke about it on our last training session, if I'm not mistaken. Did we not? I think we hit it. We talked about hey, Zillow in trouble. And it walked right into a 30% drop. Man, that's the kind of stuff we say, okay, I'm assessing this risk. They're in trouble. They can't keep this musical chairs game going. All right. I got these little $200-300 here. I understand the strategy I'm getting ready to implement here based upon the risk assessment value, the risk management that I'm putting forth within this trade to obviously, being able to benefit, off their bad business practices, in this case, on a downside risk assessment, right? Risk going to the downside for Zillow, right? Get excited. Like them $200-300 turned into what? 2,000 or 3,000, right? Those kind of return. You're talking about 1,000% return basically in a day, right? In a day, right? In my Dante Wilder voice, right? Today. See, that's what makes us unique. Why? Because we still have access to that kind of opportunity. And so when we speak about these certain things, in our little circles in general, or we post them on the, maybe be in a discussion on YouTube or whatever, that's what we all were doing. We all sitting there round robin. We're in a think tank session trying to figure out how can we all, come up with opportunity and assess risk in the same breath, right? The same way you guys do in the group we got. Me, you guys be in there, be working, man. I'm loving it because I was like, you know what? See, this is what we want this to be. We want it to be a scenario where all these bright minds come together and just kind of, weigh different opportunities, weigh the risk of markets, weigh the risk of our economic situation. That's what it's for. And I'll tell you guys, if you don't have an economic circle that you're hanging out in, right? I'm gonna say, straight up, you need to start looking for one, or hang out with us, right? Or if nothing else, right? Come to Death Row Records, right? That's our little thing. Come to Death Row Records, right? If nothing else, we got you, right? Because we don't mind, right? Because we understand that we're trying to play catch up in a lot of ways. Again, we talking about the market went from $67 to $467 in 12 years. That's about a 60% return annually. I don't care if you're a person that's working with $200, 60% on $200 is what? That's $40. That's $40 annually. Just letting that money turn over through the value of compound interest. So again, yeah, you need to start realizing the power of that and stop being scared to assess risk, long versus short. Again, the whole thesis of the short risk assessment is based on what we talked about with stuff like Zillow, like high pullback, Snapchat, right? We kind of talked about that. They talked it up before it happened to a degree. It's like, okay, well, these are the possibilities. Either we go on to 78, 80, 83 best case, or we pull them back to that $73 mark, right? Because we understand that that whole social media aspect of risk right now is still skittish because of all the trouble that Facebook getting into, right? And Snapchat is not immune to that, right? Like anybody else. And they already made a big run up into this scenario and they had a big gap to fill. The sentiment into earnings was very bullish, but it was based upon the fact that they was thinking that Facebook was going to be, really, really up the creek. With all this whole Senate hearing stuff and whistleblowing, that still had to do with the bottom line, though. You still got to go out there and produce. They already had got a favorable rating into it, right? So they got as close as they got to 78, 79, 80, somewhere around there. And then the pullback was in play. So yeah, those were the same scenarios, assessments of risk. $73 puts at that time, I think were like, what, $2, $3 of that? I think we did it on that quick little session I did with you guys over Chris that night. It was me, you, I think Al, and a few other people. Sister Angie, I think you came in there.
Yep.
We looked at the 78s, we looked at the 80s, and we looked at the 73s, did we not?
Yep.
And they were all within the value of a risk assessment of a potential hedge in that. And they were, again, no more $2, $3 of that. The thing dropped from 73, 74, all the way down to 50, 52, $54?
Yep. I bought puts on it.
See? Easy money.
Mm-hmm. Had the 63 puts.
This is 3 puts.
Made a
Even
nice
way out the money and still made a bag, right?
Yeah. Mm-hmm.
Them puts cost you about 40, 50, $60, somewhere around the $70? If
Yep.
that, somewhere around. How much it cost you?
About $70, about $60, $70, something like
about
that.
$670, and you end up making around about $400-500 on that trade.
Yeah, oh yeah. I bought about like $560, something like that.
Beautiful. Mapping out risk, right? Yeah, and we do this, not that you're going to be right 100% of the time. That's not our aim, our goal. Of course, we all want to be 100% right all the time, right? Who wouldn't? But we are under the management of understanding that we're assessing risk. We never invest more than we have willing to lose, number one, and we take our time and put together our plan before we move into action, right? I think I was discussing that with kind of in writing form with our sisters. I don't know, I think she's still in here. Sister Deshawn, you still in the building? I see you popped in earlier.
I am in the building.
How you doing today? Awesome, Eva.
Oh, fabulous. How about you all?
Hanging in there. And I was just using that conversation because I think me and you exchanged a little bit about eBay, right? You asked me about eBay. It was about finding an earnings place.
Exactly.
And it's just stuff like that, right? So I did, I was already speaking about it. I dropped a little stuff in the back chat. Of course, like, hey, this is what I'm assessing. Right, on eBay, right? This is the situation, right? They're in trouble because of who? Amazon and everybody else kind of already pre-warned that they're gonna have some issues, right?
Oh yeah, bought puts on eBay too. Yep.
Right, and that was, again, look what it did. It dropped phenomenally, right? Phenomenal, and those were cheap. They were fairly cheap too, right? That was another killer, right? And we can go on and on and talk about it, but these are what they call short-term risk assessments, right? We understand that. We talking about $50, $60 here, $70 here, a little over $100. We talking about allowing that money to go out there and track other money by utilizing, again, these financial markets for whatever value that the ecosystem is providing for us, be it short or long, right? Our earnings play or a catalyst, fundamental catalyst or technical assessment. That's the greatness of this. That's the freedom. That's the power within it. Like we love the ability be able to do that, the ability to do that. You're making executive decisions. Think about that, guys. You can't do that on the job. You can't go in there and tell Mr. Charlie, look, Mr. Charlie, look at him. Look at him. I'm gonna need you to start bringing in any good Krispy Kreme donut. Tired of these old Dunkin' Donuts. They stale by the time they get here, man. Bringing them Krispy Kreme, bro. Right? You got one more time to show up with them stale donuts. But we got some problem. Right?
That's right. Take out of his mouth.
You know what I'm saying? You gonna pour some coffee in his face and it's on flip his tie up or something. See what I'm saying?
All right.
See what I'm saying? We know we can't, we dare not try to, whatever, because that'll affect the bag, right? That'll affect the bills and all, the family house, right? So again, that's what makes the ideal of what we do unique, because you're giving full control over your financial destiny. And the extent that we've been taught to school, to education, to a job pipeline, or I'm gonna use that's a new one. All right, not the school to prison pipeline, but the school to job, school to education to job pipeline, which is seen to be somewhat of an antiquated business model. If you ask me, that's me personally. That's just me personally. Where I get my hair done at Cat Williams style. I just feel like we can offer our children a little bit more than just that cookie cutter mold going forward. At this day and age, when people becoming millionaires, 100,000aires, just by going on YouTube and doing a little funky dance, and next thing you know, it goes viral. They got million views. They get instant over 1,000 subscribers overnight. Now that video gets monetized, and now they finna get a paycheck every single month as long as that video is circulation in perpetuity. Right? That's the part of the game where we need to get our people excited about. We need to figure out how to make our money work in perpetuity for us. Make sense? Y'all agree with me there? Anybody disagree with that?
Yeah,
Right?
Agreed.
Right?
Agreed.
Who don't want to make money when you ain't got to sit there and do nothing to it? You just wake up and collect that check. You see what I'm saying? See, that's the extent of, for a person even that took the chance or took a risk assessment to do something quirky, to get on YouTube and put it out there, whatever. It's all synonymous with what we're discussing today. Right? So again, it's just, to me, I feel like it's more of it's like a gospel, right? I'm gonna use that terminology here, right? Don't y'all come from me, religious people. That's y'all come from, right? It's a gospel. It's a financial gospel that we need to start speaking about more so than none. Not to the extent where you out there trying to sell somebody something, because that'll get you in trouble. Number one, by the SEC, right? Right? And then number two, the people might come for you, right? We had a brother got jacked up the other day, right? And I used to watch a couple of his little videos every now and then, but he was out there, selling signal alerts, right? That's one thing I tell people 100%. We do not do signal alerts over here. Don't come over and say, just give me a stock. No, we're going to teach you how to fish, how you can find your own stocks, right? So you can be responsible for your financial future, because guess what? Someday that person may not always be near you, around you. You need to still learn how to go out there and do this stuff on your own, right? So yeah, it's a grimy world out there, right? Some brother ran up on the brother too, black dude, man. Some of you guys may not know about it, but of course, I'm hanging out over there in Wall Street Reddit and seen that. Oh man, they got Buddy. Yeah, they ran up on him somewhere. I think Vegas or somewhere he was at. New Jersey, he was somewhere. Dude ran up on him, man, and took one of his investment alerts or whatever he give. And I guess Buddy lost some money. He couldn't afford to lose that money. Now it's still his fault. Keep in mind, the guy that took the L, is still his fault, because he went on out there. But everybody ain't gonna take that same kind of approach to what their loss, right? Everybody where a loss is different, right? When they just, looking for, I don't know, stars, right? And they just out there, just no understanding of risk, no understanding of how the game really works. And, of course, if it goes wrong, you got to have someone to blame, right? Well, in that case, that's what went down with that. But, long story short, in this perspective, that's why we want everybody to be just responsible for their own future, because it's important. Why wouldn't you want to learn this to the extent that you can be literally your own business? your online business. Why wouldn't you want to learn this? Right? I'm seriously, just think about that. Again, we showing you here the numbers don't lie. This is a 12-year chart on the SP 500. That's about 60% annually annually. Every year, that's 6% particular return, on a 12-year period, excuse me. Make that make sense of how you wouldn't want to be a part of that. And some of you guys got kids that probably maybe had a kid in 2008, 2009. Now imagine this. You're trying to plan for your children's future in college and all that. The SP 500 alone in 12 of them years already gave you a 6% annual return. Man, stop. Look at you could have had that child college paid for and probably put some money back in your pocket. See, a lot of people don't think like that though. They feel like I got to figure out how to, do this the long way, right? We know about the Gerber plan. We know about the 529 plan. We know about all that. All right, yeah. All right, y'all know how I feel about that stuff. But I'm not just saying it's bad, but I just feel like, we can beat those portfolios. I believe we could beat those portfolios hands down if we learn how to strategically invest our money on our own, managing our own value. That's just my opinion, right? And the SP 500 right here along in this perspective or this extent of this movement here has shown it. Now people say, well, bruh, what's the possibility we get another 12-year bull run on the one we've already had? That's already looking extended. It already looks overbought. Now look at this again on the monthly chart. The RSI, again, it's up there, right? It's up there, right? And it was at extreme levels at some point, and then at some point it's less excessive, right? Now keep in mind, this is within the COVID stint right now. Of course, we're talking about the COVID stint from 2000, to 20 to where we're at today, right? Yeah, we'll probably do a correction. We spoke about that, right? If we use some basic metrics and we say, well, okay, if we get a 5% or a 10%, well, the last one we had was around close to about 5%. It was like, yeah, it wasn't that, extensive, right? I mean, it was enough, but it wasn't that extensive, as one would say, right? This one here, right? We pulled back from 453 basic down to 426, right? Right. So roughly right around that window, right? So to speak, right? About 5+%, somewhere right, give or take. Now people saying, okay, well, we're expecting a bigger one at some point. Now I'll ask you all this, and this is the part where I'm gonna ask you all. Do you guys believe, even with the fact that people going back to work, the markets, fighting inflation right now, commodities are through the roof, all these other issues that we're dealing with, in terms of being able to, balance out our debt to equity ratio. We have less producers than we have goods being consumed. That's why we have supply shortage and supply chain issues. That's just the natural order of supply and demand, right? Not rocket science. You guys get that. But at some point, y'all do realize, right? These CEOs are ultra greedy. Do you not think these people are going to figure out a way to fix that? Or do you think they're just going to let it just unravel and just like, whatever, let my business go under because of this, that, and third? What do you guys think about that?
Hell no, they ain't gonna let that happen.
Right? And to the extent where you think it's going to cause the markets to sell off at least a minimum 30, 40, 50%. Do anybody think that potentially could happen?
But some stuff is uncontrollable, like inflation.
Right, which is pretty much the name of what they call the game of the day, right? We all dealing with deflation, right? Learning how to dodge it, deal with this, that, and the third, right? But within that, that's why I asked that question. Do you think these CEOs at some point going to figure out a way to try to go around it, like they always try to?
I think,
Now the rest is still on government. Go ahead.
I think this time they will.
I think they have with the NFTs and things like that. Like I just shared the link about with the yacht and buy your own icon. That self-love is the one that shared that with me. But these NFTs, like looking at Zuckerberg start his own coin and all of that stuff. We're going exactly where they were planning to go. So I don't think there will be a zero ROI anytime.
Well, just using that, okay? That's just other means that they can find a way to bring us some revenue, right? But just
Right.
just use it from a
Like Go ahead. No, I'm like, they're acting like they're really spreading the wealth, but what they're doing is pressuring the community to get fresh ideas and innovative ideas, and then they capitalize on them.
Okay. All right. Well, again, see, that's what I'm saying. In terms of, when we think about now, because some things are ubiquitous, and that's what I'm getting at for the commodity thing, because commodities are everyday use cases, right? That's bread and butter, wood, nails, metals, chickens, hog feeder, soybean, London coffee, whatever what that's about, right? London coffee, you see, right? Right. It's that kind of stuff, right? And it's not that the fields just stop growing it or the earth stop producing it. It's just that there's a problem with getting it pumped, grown, produced, packaged, and shipped, right? Because there's a lag. Go ahead.
I don't think they can escape that, because you just have to spend more. When you got to spend more, you got to bring in that same amount of money. That's why a lot of companies is getting their behinds kicks on their earnings and they not making revenue. They can't produce goods. They can't sell stuff because it costs too much to get it. And then you got to find the people to get it, to deliver it. So that's going to be an issue. I don't think there's a way out of that. Artificial intelligence is not here for you to make robots to do that. So they in a tight spot when it comes to that.
Right. Now, good assessment. That's a good assessment, Open Chris. Now here's where I'm going to kind of push into that a little bit, right? They're going to push into that commodity room, that inflation room. Now, with that also being known within those moments, now I'm going to play the role of Jerome Powell. How much of that do you think is transitory? How much of that you think is permanent or sedentary?
That's all of it's permanent.
Think about that when you make that statement, because you want to think about, right, the ideal that, do you think they'll at some point be able to work through it, right? Meaning at some point, the money that's causing it, because we know what's causing it, right? Now, let me back up a little bit. Do everybody know why inflation is here at this point right now? Or what caused it? Do anybody not know why inflation is at the level that it is right now? That's our bill. I should ask it that way. Anybody want?
I'm going to say, just for explanation and education, no, I don't know why it's like that. What's causing it?
All right. So, in essence, to the ideal of what has caused it is that we have an abundance, right, of demand, right, to a degree, but we have what?
Insufficient supply.
Very insufficient supply. And the reason why the supply is inefficient, right, is because a lot within the commodity markets has been priced out, right? It has priced a lot of the corporations out or the businesses out to the degree where, and with the Feds diluting a lot of the money supply out there, right? Or not necessarily diluting the money supply, but just diluting the value of our money in essence, right? In the middle of a pandemic that's already being stricken by the fact that they can't move goods and, they can't do natural commerce as usual because of all the typical stipulations that's come along with being inside this pandemic still, even though some of the stuff is easing up, right? So the aspect of being able to produce goods, get those those goods packaged or raw materials turned into finished goods.
Yeah.
You see what I'm saying? And then packaged and skewed and sent down the road, right? That's the whole process in itself, and it's costly to do so, right? Again, it's not that there's less trees out there, less rubber from the rubber trees coming out of the Congo or something to make Michelin tire. You don't have people to get that stuff at that level now. You don't have the same capacity of people that was doing it pre-COVID than today. Make sense? So,
right, because some companies might have been already cash strapped, so they can't afford to pay the additional cost of the raw materials in waiting for the money from the products to come back in. Whereas you have the huge mega market cap companies who have free cash and they're like, we can do it because we want to keep our supply chain going. We want to keep, pushing out products, and they're going to knock some smaller businesses or businesses period out of the game, right? And so that leads to, again, more issues with supply.
Facts. Right? That's literally it in a nutshell, right? The idea that you don't have enough people to produce the goods and service at the rate that is needed, that causes a bottleneck.
That's what I was gonna say too. On top of the fact, if let's say they promise, okay, well, we want y'all all to come back and work. They create a deal, and they say, well, we're gonna pay you more. Now you have wage inflation. That's not good either. So
Well, see, that's a good point.
They're letting in all the immigrants for? They're getting in the labor that they want.
Well, see, it's bigger than that because again, majority of the immigration issues, even with that side, sister Angie, is that that's more on the American-based side, right? A lot of societies out there don't allow that at the level that America does. So they're trying to protect their economy and their homegrown citizens, right? So we're the only place on the planet that allowed that kind of level of I don't know, illegality of immigrants just to come in and just get room on board and all this stuff. You wouldn't do that going into Russia. You're not going to do that definitely going into China, right? They don't play the radio with that, right? You ain't coming in unless you got your stuff. So because even with that perspective though, who produces the majority of the goods and services that come on the commodity side of things in terms of raw materials? Definitely not America, right? That stuff is really being controlled by who? The Chinese. Right? All your bauxite, your iron ore, right? Your aluminum, that stuff is China. And they buying up a lot of strategic
world.
Yeah, throughout the world. They all
China was all up and through Ghana when I was there, buying up property.
Right. And look how long they've been in Africa snatching it up. Of course, that's the new That's the new what they call the Berlin Conference. It's China now.
Yeah.
True story. They all in Australia buying up prize land in Australia. I mean, really untapped resources of of metals and things of that nature.
Expansion of China.
Right. The same way in South America. They got all they loading up and they're holding the people's economy in collateral because they can already afford to extract it, like we just talked about, to produce it, to get it out there themselves, which will always boast their economy, right? They don't have the manpower or the education or the machines or the economic value to dig into the earth to get it out thoroughly. Why? Because they've already taken on too much debt to the point where they thinned out their scenario and they don't have that extra surplus to be able to educate their populace to get them in a position where they can get the machinery, this, that, the third, right? To be vertically integrated, right? There's our terminology again. We love that terminology, vertically integrated, right? Essentially, that's what we're all trying to learn how to do in our own lives. We want to be vertically integrated. Come up with the concept, manufacture it ourselves, and then go out there sell it or this, that, the third. In this case, we're using the markets and we're using other skill sets that we have. That cuts out a lot of the middleman, right? That's why we deal with brokerage accounts more than we deal with bank accounts. Why? Because brokerage account puts you in a more vertically integrated perspective of opportunity than you could ever have through a bank alone.
Right.
Make sense? So these businesses, in essence, or these economies around the world are in that same predicament. They've been already debt incentivized from the World Bank, S&P programs, right? Y'all know how that stuff go. IMF, they've already, for lack of a better word, destabilized these people on the debt side just because they just want bags of rice, simple stuff. And they're using their land and the stuff that's in the land as collateral. Make that make sense to me. I'm giving you gold, raw gold, and you give me a bag of rice or bags of rice. Make that make sense.
Mm-hmm.
So again, that goes back to the idea of being able to have a position where you're able to, facilitate your own economy to sustain yourself and also to be a power player, right? Again, if people are not able to produce goods and services because they have a shortage of workers, a shortage of, manpower to get the stuff up, get it machine, manufactured and move it, in comes again the supply chain issue. And when that becomes a problem, and you got constant dilution that's happening around the world because most of all the central banks are still printing money. That's diluting already the currency that you already got that's messed up and scarce. well, it's not scarce to the point they don't have, meaning the power of it is becoming scarce. The strength of their currency is being diluted. Make sense?
Yep.
And so when those things happen, now we move into what they consider to be what you're talking about, over Chris. We go from inflation to what? It starts with S.
Stagflation.
Say it with the chest.
Stagflation.
Stagflation. So what is stagflation? Really quick. Again, we talked about it before, but I want to hit this point because this is part about assessing risk. Somebody give me the definition for stagflation. Paraphrase or the technical. Anybody. What is stagflation?
Stagflation is an economic event in which the inflation rate, I just lost it. Well, basically, it's when your economy don't produce enough goods and services to profit, and when the unemployment level is high. So you got short labor.
So short of labor, right?
Mm-hmm.
Short of labor, which is the key phrase in that, right? Short of labor. That means you don't have people to what? Produce, right?
Produce goods and services lacking growth.
Right, which stunts your growth, or at least puts it on the shelf, ice cold blooded, right? And now the bottleneck happens from there. You can't move the stuff through the ports, can't move it through plane, can't move it through train, because there ain't nothing there. You got people, buyers who want it and demand. You got people who already was in the backlog waiting on this stuff, and they got to wait longer. You got to hope they don't leave and take their business elsewhere, right? And this cause all kind of problem. Now it becomes a game of what everybody's scrambling to figure out how can they get their stuff to make sure they keep they books balance and inner value of growth projections, that they can keep their shareholders excited about hanging around in the stock, because now we have an issue where we have to we can't move as fast as we want because the world pretty much almost at a standstill to a degree. And certain companies that are affected by that the most are going to be the ones who deal more with what? High values of what? Base case commodities.
Mm-hmm.
You can't wear a pair of Nikes without what? The cowhide. Right? Or whatever that new, they got all kinds of new materials out there. But if you can't get the materials, how you gonna get them Nikes down the street?
You can't.
You know what I'm saying? So you working on the supply that you already have in circulation. When that stuff dries up, you're in trouble. That's just like, back in the day, whoever got, got the power, or, let's say a burger out there doing the little pharmaceuticals on the street. If he the only one with the power, guess what? Everybody else dry. Guess what he gonna do with his prices? You think they're gonna go down, stay the same, or they gonna go up?
Go up.
They're gonna go up. And what's happening right now with a lot of these suppliers, Kroger, Publix, right? General Mills, Kellogg's, Coca-Cola, right? PepsiCo, Mondelez. What are they getting ready to do? If some of them already started to do it, what are they doing right now as far as their business area? Are they raising prices, keeping them the same, or dropping them?
Raising prices.
Which further exacerbates what? Already dry to weak economy, where people are not necessarily back to work like they need to be full place, right?
Mm-hmm.
So it's already straining their pocketbook even more. And you ain't getting no more government, stimmy checks.
Mm-hmm.
They cut them stimmies out. Unemployment gone. Rent moratoriums gone. The whole thing you still got now is student loan moratorium that ends January the 4th, right? So look, that ain't nothing, right? It's big, but it ain't like, no, I need food now. Think about that.
All tapped out, Jake.
And they're not done yet. And they hit you with what? Vaccine mandate. You can't work unless you got the jab.
It's like they want this stuff to happen. I'm like, how you do that? And you need the people to produce. That don't make sense.
We talk about federal all the way down to some of these more big baseline corporations. If you ain't got the jab, you can't come to work. So you got people, like police officers walking off the job, firemen walking off the job, nurses and doctors walking off the job.
We'll holler.
Because they don't want to be, So that's the compound effect of that. Now you say, dang, that sounds like a whole lot of problems, bro. Why would I want to be invested in the market then if all that going on? Well, can you go out there and find a job where you have to deal with all those things I just discussed about and make the level of money that you feel like is comparable to that of what, the economy is now charging you through inflation right out the gate without having to retool your skill set and then find your specific program of choice, be it you've been in college or a skill set. That's gonna be like a needle in the haystack in some cases, even though they're saying we have a surplus of jobs that are yet to be filled. But those are some industries that are not within people's their wheelhouse and their repertoire. Make sense? You got to retool yourself to go find unemployment. Some people will hire you on the strength now because they just need the workers. But in the same case, you still got to get through the vaccine mandate, all that stuff. If if you're a person that y'all get it.
Yeah, if it's a job of worth, you know what I'm saying? It ain't finna just be like, oh, we open for all people. No, they looking for specific people still, and you got to get the jab. Got to get the jab too.
Is that how that works?
Highly skilled people. So you can't go from working at Burger King to, being an IT tech or a data analyst. Don't work like that.
You all know, like, man, I know how to break this thing. I've been on that fry line for 20 years, boy. Look, I know how to put them wires together. you be in there frying bologna sandwiches, thinking you in there working in a data room with the servers there. You in there just crossing wires like you a switch phone operator. Like, boy, look at what you did.
You see how it goes?
You said the fry line.
Come on, you go fry line for a long time. But you go every day smell like
you see how it goes? See how it goes with them fries is? You don't just get fries like that.
What? I'm talking about the technician.
Right.
I think
it's a technique to it. It's a technique.
Right about the salt and everything.
Right. You better put a glaze of salt on it. You don't put a pinch of salt. You put a glaze of it on.
You know what I'm saying?
Yeah.
That terminology joke they ain't even ready for. Like, bro, let's see this outside. You ain't ready for this.
Gotta be like Day Dad. Yeah, you gotta put it on there for 20 minutes. It ain't
Okay.
enough time yet.
That right? Ain't come through.
Y'all fool.
That's precision, though. But see, this goes right in the hand of what we're discussing because, see, price of goods and services are going up. The value of jobs that need to be filled, they're not there. They're just not being filled because they're making it harder for you to get work because of the mandates. Yet they're trying to act as if the whole. And I got to go there for 2 seconds, right? Because it's a part of our economic assessment of how we do investment. Because it's a part of what current events. This whole issue with the vaccine mandate, whether you're for or against it, because y'all know we don't do echo chambers over here. Whether you're for or against it, that's your right. We don't do echo chambers over here. So if you pro, stay in your lane. If you're against, stay in your lane. But ultimately, we're going to talk about it in a way where it's effective for us for an investment thesis. Why? Because it's important because your economy is already trying to recover, and you're going to make it that much more harder. When you say, well, it's easy if everybody just go ahead and get the jab and get back to work. Okay, but they still got to deal with the value that the idea that the commodity market, because the feds have exacerbated the issue by printing all this money. It ain't like you're going to turn this around overnight, even if everybody went and got the jab and start working. Why? Because that ain't got to do with what's going on in China,
Right.
in India, in Taiwan, and Vietnam, where the majority of our really hard tangible goods come from. We do a lot of produce in America, granted, but Brazil do just as much.
Yep.
And it's organic. Don't panic. I'm just keeping it 100. So again, I just asked y'all, what does America really produce to that level where if we all went back to work, all of a sudden our way of life, of course, just going to return back to normal? No, we do more outsourcing than insource, than in-house stuff. I'm just keeping 100.
Produce a lot of debt. That's what we produce, a lot of debt.
Right, we're a service-based nation. We didn't sold all our, that's why they call it the Rust Belt, right? The Rust Belt, where's the Rust Belt? Up what? I-75? If y'all, where my I-75 people at? Up through Ohio, Michigan, all up in where y'all at? It's rusty up there. Them factories been shut down. Other side of plain, Pittsburgh, all that.
New York, Pennsylvania, all that the Rust Belt.
Rusty. I'm talking about rusty. What they call it? What they toe man poison back in the old days? I might be saying get gangrene.
Oh God.
Ain't no factory chimneys humming around here. Stop playing. Might build back America. Stop. Jokers ain't about that life, right? Because they disincentivize people to want to feel good about re-incentivizing the country or the corporation of America to get behind it because they've already sold out a lot of what people's reality. Your savings and all this. These people just playing games with it. Why? Because they rather put it on the what? On the chopping block of the what? The stock market. Couldn't make this stuff up. So I just go back to an old rule of the old school thought process. If you can't beat them, what?
Join them.
Join them. The markets are expansive. Again, like I said, you don't have to follow certain stocks. You don't have to invest in prison stocks if they're locking up your family. No, you can invest in other stuff, right?
Right.
You don't have to go ticker for ticker with them or stock for stock with it. Make sense?
Mm-hmm.
Right. So it's crazy out there. So, you know, again, we talking about, man, if you see on my screen here, this is the PPI, right? Producer Price Index, right? Can y'all see my screen? Matter of fact, no, I'll be sharing it sometime. We'll make sure.
Yeah, we can see it.
Y'all see?
Yeah.
These are some of the latest numbers, right? Of course, we know this. And the PPI last numbers came out was at what about where were we like I think we had
September?
what? This is we the one we had just recently October. We were up. Well, we went up to like 1.3. It rose right from the 0.5 aspect of the. But we went up. I think the total number. I'm trying to get the total number. I think the total number was like what? It was like 5 something, 5, 6, some odd percent, somewhere around there, give or take. And the majority of the things that they keep leaving out of it, right, in terms of CPI and nothing else, right, the producer, because this is producer, right? We talking about producing goods, right? That's why I went to the PPI as opposed to CPI. As of now, this is the producer price index, meaning these are people actually trying to get the goods out to everybody, and they're catching it, right? These numbers are all over the place, jacked up, right? Right? But on the consumer side, of course, the things that are hurting everybody most at the grocery store are what? You know, again, the cost of food, right? It has gone up exorbitantly, right? Overnight.
Mm-hmm.
So, I don't know if y'all seen the latest one. Matter of fact, gosh, I don't know if I didn't because I ain't been on Facebook in a couple of days and a half, granted. But I'm sure you guys know how to follow this because y'all be on it too. Y'all be grinding. But I think the latest, let's see here, and I'm gonna post this one too. But I want to make sure. Where did I put that? I know I put it somewhere. But it's just the ideal of where everything's at, you know, in terms of the cost analysis, right? So when we're doing an assessment of what the price of stuff that's gone up because of inflation, right? Now it's a gift and a curse, right? So gas, like as of today, regular gas is up 43.3%.
Mm-hmm.
Now this is on a per annum basis within what they call year to date, right? The YTD, right? 43.3%.
Well, is this CPI data?
What I'm reading off now?
Oh, okay, I see it. Mm.
Yeah, I have it on my screenshot now. I'm gonna actually post it. This I'm on the PPI right now, but I'm gonna go back. I'm gonna double back to that CPI. But this is a screenshot I had just from the raw numbers, like from day-to-day use case, like we want to see like a raw number. As of today, we're at 43.3% on regular gas. Gas. Now, notice I say regular gas. Now, some of y'all got these old foreign cars. I just talked about them old school cars, so y'all can't put that regular in that new stuff y'all got. You got to put in that premium, that 93, right? So you basically at about 53%, in your scenario. If you got to put anything besides 90, 89 in your tank, that's a big bill in itself. And the price of oil ain't coming down. JP Morgan literally put out a press release the other day that they're saying, oh, we're all but certain that we're going to hover around the 80s for a lot longer. They still shooting for that $100 a barrel now. This shows you just think that. Joe Biden put out a press release yesterday, or maybe this morning, that he made a plea to OPEC that they can open up their reserve, the spigot basically, and pump more barrel, because that's the only way you're gonna get the price of oil down, right? By obviously unload more of the supply. And guess what they told Joe Biden?
Kick rocks.
Kick rocks. Now here's what's crazy. Y'all remember when Trump did it? Remember Trump did it as well. Right. Trump did it back to 2020. He did it in 2020. He told me he sent Jared Kushner, his son-in-law. He sent what was the other guy now? I forgot his name. It come to me. One of his other little, advisors, not Cutlow, but the other guy. I can't think of his name now. Anyway, they sent Jared Kushner over there to the Middle East of Saudi Arabia, and they worked some backdoor deals on real estate and oil. That's how Jared Kushner ended up getting them real estate properties in Saudi Arabia off the back of taxpayer dollars. That's another conversation for another day. Anyway, Trump pretty much told the Saudis and the Russians that, look, we don't need barrel of oil to be no more than $50 to $55 a barrel. We're not going to do all this $70 a barrel or $60 a barrel. What did the price of barrel oil go down to? $50 and change. Remember I told y'all, I think a while back in the case that I said, for a company to be profitable selling oil, they need to be at least a minimum of $50 per barrel. I don't know if y'all remember that.
Mm-hmm. Yep.
That's the case study in that. Trump got that oil. He did that through backdoor dealing, whatever, and they pumped more oil. And guess what? They got the barrels down to around about $52 to $50 plus a barrel. True story. And we can go put this up and show you. We ain't just talking. We can go straight to investor.com, go to the oil, WTI, and we can show you on the chart. When it was kind of going up, then they pulled it back down. Biden is, again, this is not Republican or Democratic conversation. Don't get in your feeling. But in terms of negotiations, bro, he's struggling. Right, I'm finna go deep south on y'all from Florida. He's struggling with the SK. He's struggling right now. He's struggling. He's struggling, bro. They literally told him to kick rocks today. And then JP Morgan reiterated, he was like, look here, we need oil, or we think oil gonna stay in the mid to high 80s, right? Or basically in the 80s for a lot longer. And like I said, this is the case they can try to make that push to $100 a barrel. We already in inflation. We close to being in stack. We are in stagflation in some cases. And they're hurting you at the pump. They're hurting you at the grocery store. They're hurting you at the job because you can't get a job if you don't have the jab, right? And you got to sift through the dog-eat-dog world of your application or your resume above everybody else, even though you feel like everybody should just be welcoming everybody back to work. That's still not the case still, because some of these businesses are being selective.
Yep.
On top of that, and again, we are in a somewhat the super cycle of what the marketing scheme of what most countries, their moment to make a big rush to get money from the taxpayer through what holiday spending.
Mm-hmm.
But yet these stores are what they dealing with what a limited supply.
They ain't got it, Jake.
Right, so the prices finna go up.
For the glue, the glue. Can we use this?
Right. Oh, somebody just talked. Okay, I thought somebody was talking. Yeah, so prices finna go up, and that's gonna be another problem. Right, that's gonna be a whole new can of worms. So again, going back to this really quick, gas up 43.3%. Electricity, y'all paying more for y'all electricity right now. For some of y'all probably already know. Some of y'all probably just like didn't even think about it. But electricity energy is up 5.2%. That's a lot. Imagine if you paying $400 already or $200-$300 a month in electricity. And you didn't have the gradual increase 1%, 0.7%, 1.6%. Now it's at least minimum about 5.2% kick on your electricity bill. Well, you at PCG, right? PG&E, Pacific Gas and Electric, right? Crazy. Used car prices are up 24.4%. Even the hoop is gonna cost you a little extra. 24. So guess what? Resale value on used cars, if you're looking to sell your car now, yeah, you're gonna get a little extra penny for it. You can negotiate a better penny for it now. 24.4%. Right? Hotel rooms up about 19.8%. All my other players out there, I'm sorry, bro. You're gonna have to find another way. You go in the back of the SUV, go park in the woods somewhere, maybe. I don't know. You broke. Can't even take it to the moat.
We just had no more red roof in.
Boy, you can't even go to Red Roof right now. You got to go to what they call the Moonlight Inn. Like, right out there by Oak Tree. Hey, you in trouble.
That shack behind Walmart.
I'm talking about all back there, just wide open. Just open, the man don't roll up on you. Right? 19.8%. Clothing, apparel, 3.4%. Some people might say, well, that's not a whole lot. I bet to disagree. 3.4%. So imagine that. If you already got an article of clothing that you $high-dollar item buying, your $500, 3.4% on top of that, and they're gonna hit that. That's not even including the tax. Oof.
Mhm.
And that don't necessarily mean these numbers are not going to go higher or they won't come down at some point, but these are just as of today. Ground beef, right? For all my beef eaters, right? Where's the beef? 10.8%. Some of y'all probably been seeing that already at the grocery store, especially if you got families to feed. You know, a pack of ground chuck, 80-20, right? Old school, right? 80-20 ground truck right now. Chuck is definitely going to be a little more expensive. You might have to get that 70-30 or that 60-40, right? More fat to meat ratio. You might have to stretch that a little bit. Let me get that 60-40 today. I can't even deal with that 80-20. I can't afford it. Right?
Yeah.
Right? Bacon. Bacon is up 19.3%. Bacon. Right? Let that marinate. Again, I'm just going to do some raw data here. 19.3% for a slab of bacon. Right? Eggs. Eggs are up 12.6%. See, this is why y'all need to hit up my homeboy, right? Brother Ali Dawood L, right? Black Soul Farm. If you're gonna pay that much for eggs right now, and them little cheap little dusty eggs y'all get from Walmart and all them, you might well call up Dawood L and get you some organic eggs. Cage,
Right.
look, you might well go in to pay that brother. If you're gonna be paying that extra 12%, go ahead and give it to that brother. Black Soul Farm, Brother Ali Dawood L. Hit him up.
It's transitory.
Right? You see what I'm saying? Right? Apples up. Apples are up 7.8%.
Transitory.
Right? I mean, it's crazy, guys. So those are just some of the raw data points. This is coming out of the Bureau of Labor Statistics, right? These ain't just my numbers. Go to the Bureau of Labor Statistics. You can pull these data points up yourself. I'm just showing you on the PPI side of the thing, right? In terms of how food values up since September, right? 2%. You had the increase. That's the increase. And when you see this right, find the good demands, that right there, that's the increase. So from the previous month to this month, it's up. Food is up 2%. That's a lot in terms of the macro picture. Energy is up 2.8%. Right. So this is just from month to month. So those numbers are up sustainably before they got to this month, and then they incline. They didn't see. You don't see no negatives. That's my point. You see no negative notches in front of none of these scenarios right here. The only way you seen a negative on this right here was what? Is transportation and warehousing. You had a what? -4%. Right.
What's
Again,
this website open?
Say again.
Oh, never mind. You said Bureau of Labor Statistics.
Yeah, you go. Yeah, where am I? See, right. Matter of fact, I went to it now. I'm going to it, but yep. Go to the Bureau of Labor Statistics. You'll be able to find out like the price of consumption stuff, like the price of goods and services. All these are raw data points. So this ain't no just making up numbers and people giving y'all. These are primary sources. Well, to the extent that the government controlling it, I let that be what it is. Right. But yeah, so that's basically what we're dealing with here. Right here, just pretty much a little, little scale sheet to show you exactly what we count from, over time, in terms of transportation and warehouse scenario like this.
Is that under the PPI?
Yeah, it's under the PPI in terms of the commodity data points for transportation and warehouse. Because that's still gonna fall within that. You think about transportation, intermodal, boat, ships, all that stuff. Even though you got the raw good like the wood, the lumber, all that. But can you see my screen? Matter of fact, is it showing? Can y'all see me? See my screen?
Yeah, I meant to get all them numbers for the different goods and products.
Talking about the ones I was just reading off.
Yeah.
Oh, I haven't. I was just that was my screenshot. I was gonna post it actually post at the group, but it's actually on the Bureau of Labor Statistics though. You can't go through it and find it on here.
Okay.
It's the same thing. Which one I want to? I go through it maybe at the end. I'm gonna keep moving a bit.
Okay.
Right, but no, this is where you're gonna find it though. Because matter of fact, so that's the transportation one. So let's go to food real quick. Right. So this is just the bigger macro picture, right? Then from there you can go through. It's one of the which one is it? It's the I don't know if it's under the subjects where you go to the actual numbers of the of those some of those items like the ancillary items. It's broken down. Which one is it? It's not consumer. I found it maybe like once or twice. I know how to do it when I'm not sitting there trying to focus on it. I don't want to spend too much time burning through it because I don't come in there all time for that. I just find it when I need it. All right. But no, this is where you want to come to get it. Just come to the Euro Bureau of Labor Statistics and you'll be able to find the data for that. Right. And so as of November, of course, this just as the latest, in terms of where we at in terms of the food, right? But we just looked at, about what was it, 0.2%, increase from that perspective. Went down slightly in July and then right back a big expansion surge right back up in August. So from July to August, we went from negative 2.1 to net positive 2.9. So that was basically about a 4% flip. That's when you know it was real at that moment there. So guess what? If you were getting ready to go into Q3, if you was reading the tea leaves there and saw that the food expenditure flipped and the inflation just shot through the roof, that 4% flip from July to August was enough to let you know that, we're in trouble. So companies like Kellogg, General Mills, Hormel, what's the other? Calamine, right? They do a food distribution. Mondelez, any of those, Pepsi Cola, any of those companies like that, you can start looking at them and say, okay, they finna, this is going to be unique. They finna be, scratching their back a little bit here for their earnings report. At some point, you can start hearing them talk about, we're in trouble because of supply chain issues, blah, blah, blah. That's strategic. That's strategic, right? That's how you can look at your investment and say, okay, this may be a little problem here. Some of them may try to price it in through other factors, but at some point they're going to start speaking like, okay, this is going to be a carrying cost. We need to pass this off to the consumer at some point. We're trying to eat that cost for now, but at some point we got to raise the prices. Mondelez just had earnings the other day, right? But y'all know we talked about Mondelez a while back. I remember we had a little fun doing it. We were like, well, y'all know the company Mondelez, they pretty much cater to all your little snacks and zooms and wham, right? They produced what? They the people who own what? Oreo and all this, Oreo cookies and all that. Mondelez, people didn't know that, right? They just gave their outlook. They're in trouble. They're gonna have to raise. They raising their prices. They say the first year, January, they're gonna raise their prices on all those goods and services that they offer.
Yep.
So all your little Oreo cookies, they finna go up. So guess what? You better go stack up on them now. What they call load up on your supply now, right? But that's what people started to do now. See, this is what happens in inflation when you think about stagflation might be coming. So what people do, they try to outrun the price increase, right? But here's where it get crazy. Now you can do that with toilet paper. Hence, we did that with COVID. People went and load up on toilet paper, paper towels, and all that stuff, right? Lysol sold out, right? You can't do that with perishable goods. Them Oreo cookies only last for so long now. Even though we know they ain't organic and they neon, they got all kind of chemicals in it. They last forever, right? Shots fired. But they still perishable goods. You can only keep them for so long.
Don't talk about my Oreos. Don't talk about my Oreos.
Shots fired. There it is. I know I can get somebody. Shots fired, right? Somebody.
I do at least get the gluten-free ones. I do get the gluten-free ones.
Right? See what I'm saying? You gotta get them gluten-free, bro. I can't be playing around all this shit.
Start making their own Oreo cookies. I got my cocoa powder. On Oreo cookies. I got some cocoa powder. I can make my.
See, there it is. You gotta be resourceful.
I learn how to make my own.
You gotta make your own now because they're going to be taxing. Man, Oreo cookie right now for a pack. I've been a long time since I bought some because y'all don't eat all that now. But I can remember the years when I used to buy them. Man, that thing was already back then with about $3-4 a pack, if I ain't mistaken.
They still $3 in some of the pack, but the pack is smaller.
There it is. See, that's how they get you. When we talked about that guy, you'll get the same package, right? That's how they get you. See, y'all get it.
They were also saying chocolate was in very low supply. Chocolate itself was very in low supply.
Boom.
Yeah.
I'm happy you brought that point up.
That happened like a couple of years ago.
And it's happening again. I'm happy you brought it up because guess who's been crying lately on their earnings report? Hershey's crying. Price of chocolate cocoa is up. What was the other company that do the other chocolate? God, what's the company? Of course, Mondelez, they talked about cocoa, raw cocoa. I was on their earnings call the other day. They hurting because of cocoa prices. And the workers over there in West Africa, they're pushing back. They're being underpaid to the point where they don't even have a livable wage. So they have a supply constraint over there as well by getting the cocoa out, meaning the actual cocoa pods out, so they can go take it, refine it in any other place. they having supply issues because the workers can't even afford to be able to live under the supply strength need that the companies are needing it so fast, on top of the other issues, and that's causing it even more problems.
Yeah, they make like $2 a day.
It's sad. It's so sad. Again, this is what I talked about earlier, where you're taking fiat currency, the money ain't worth the paper it's printed on, and you're getting a real, actual value of what real money is, meaning a product, a fruit, a bar of gold, or a diamond. See what I'm saying? And they people give you monopoly money for it, and they finna undercut you. You're not even getting fair value for it, not at the level that it needs to be. Right? The currency exchange reality is kicking you in the behind because this is the greed of how y'all know how this stuff works. I ain't got to go into detail. Y'all already up on game. We on code. See, this is the robbery.
A little bit of cocoa powder goes such a long way. It's so strong.
If you know how to use it right?
I OD'd on my cocoa when I first started using it.
Now y'all know Hershey greedy. They don't care about all that. They already getting that peanut prices. You see what I'm saying? We just talked about the Coca-Cola, right?
Now we're getting to know what products are like when we get in the organic form, or as close to the organic form as possible. We see how far they stretch. With the companies, they'll put a little bit of chocolate and they add everything else, all these flavorings, all this stuff, stretch it out. But a little bit goes so long. When people start buying those things, then those companies are gonna have an even harder time later.
People are learning the real cost of goods when all the energy got to go into it.
Right.
Yeah.
See the labor intensive part, right? Keep in mind, these people are, again, some of these are very labor intensive jobs, and they're not being paid their worth. Again, Sister Shonda said like about $2. Imagine that. See, this is the same issue in America. So Americans are spoiled, right? This is the most entitled nation on the planet. Do you think people are gonna go to work for anything? Even though we dealing with what we're dealing with, do you think people are gonna go to work for anything?
No.
They not.
No.
So this is why this is the pushback in terms of the government. This is why they're trying to bring in what? Illegals. But you can't just do that. You can't just open your borders to people, dilute your workforce from people that already need work, regardless of the fact that you feel like they want to fill a job or not. Because the problem is that the fact that they don't put enough into education and retooling people to have a multiplicity of skills that they can go into, because they make the price of college and stuff like that exorbitantly expensive. They price people out the market from their economic scenario, from their demographic scenario, and now you have a whole new different big can of worms to deal with. And they still have yet to realize that. So they say, well, the Fed is supposed to be the person to backstop the unemployment office. Now, do you think the Federal Reserve care about somebody that's living in the hood somewhere, Pookie and Ray Ray, in terms of their economic employment status? Do you think they really care? Do you think Jerome Powell care about Ray Ray them?
Not Ray Ray, no.
Seriously.
Use it for its benefit, though.
You see how that works? So they thought these blanket statements and blanket talking points in relation to that, and the people come right out and tell you at the end of the day, basically, we just trying to make sure we keep equity market stable. How many people that's in the hood invested in the stock market? Are you kidding me?
Joke team, man.
I mean, and they do this right in your face. Like, it's in your face. They space
the stimulus. The stimulus is this, that's why they gave it to people with a certain level of income, because people who have a certain level of income traditionally spend every dollar. So they're giving it to you so you can give it back to them.
Right.
Quickly.
They know you're gonna give it back. They know you're gonna give it back.
Again, what went up when under the first stimulus check? Nike, cell phone. They did a study. It was like Nike's shoes, cell phone, purses. Those were some of the biggest high dollar items that were bought on the first stimulus check.
I was told that black people don't really spend their money on that stuff. I'm like, man, you got to be a fool. You got to be a fool.
Look at what they say. Go if you want to see what they doing. Go to the gram. Go to the gram. Then if you want to see what people spend their money on.
Oh,
right?
We
Instagram.
that
is
all in the news. Right? PPP loan. What they was doing, buying jewelry, buying
houses,
cars.
jewelry, foreign cars. They were again, see, this is what this goes right back to the tonight's topic of discussion: risk, assessing risk, long versus short term, right? Mapping out your money. People have yet to still realize that because they feel like if they can't control it from day to day or from minute to minute or hour to hour, they're just as much like, you know what, I don't want to deal with that. Right? See, they in the mindset they got to micromanage because they feel like the greatest aspect of security is in the fact that they can watch it, you know, at every extent that they obviously can afford to watch it. And that's supposed to be some kind of form of, I don't know, security for them mentally, psychologically, I guess, maybe. Like, no, your money, look, I keep saying it's a resource, it's a tool for a reason. You're going to have to be able to trust it at some point. You're going to have to put it out there, let it go to work for you. And stop taking on the approach that you feel like you got to be the labor intensifier in every aspect of being able to get money. Again, the whole pull yourself by your bootstrap, that abomination of a phrase, that's silly. Seriously? You don't feel like a man unless you go work hard for it? Y'all heard that before?
Mm-hmm.
Who y'all think made a lot of those phrases? Seriously, think about that. People who got a lot of money, do you think they out there getting dusty and rusty and breaking, you know, toenails and fingernails and their knees all? Seriously?
Work smarter, not harder.
These people are drinking mimosas at 8, 9 a.m. in the morning. You drinking coffee straight black to go to work to deal with these people at the job for 8, 9 hours and not swing on somebody. And they drinking mimosas and strawberries and listening to soft music at 480 hertz and man, stop. Stop. Right? You just hope you don't swing on a joke at work, you know, for the day. I just got to get through 8 hours without hooking on a joker. And you drinking the strongest coffee, right? This is the, see what I'm saying? This is the reality. So you got to find a middle ground at some point in your existence to realize that the game of America is what? Incentivized through asset ownership, period. And you learning how to assess risk different than you used to in the past. You can't survive. You can't raise your kids in that environment if they don't know how to hunt. Right. If their ideal of hunting is going to school to get an education and go work for somebody else, that ain't hunting. That means you're being reared to be cattle. Stop playing.
Mm-hmm.
You rearing your kids to be cattle.
I was telling my homegirl, I'm like, do you think white men's wives is working hard like y'all do? They somewhere sipping tea and mimosas, South Africa or Italy or somewhere.
They country hopping.
Plenty of vacations. You don't do that.
With their little dirty little Birkin bag. I got to go in for a hot second. Y'all know what I mean. It's expensive, but the little dusty little Birkin bags and they just flaunting and flossing. They joke at the job like, bro, I didn't went to school, got all this debt, and I can't even get my fair way. They joke they already want to hire me because I matter if I post something on my YouTube, my Facebook today about that. About our sisters, right? Our sisters are the most what? They're the most indebted in terms of student loan debt, literally on the planet. Black women.
Right.
Are the most
emulated though.
Say again, Oba?
I was gonna say but the most emulated though.
By far.
Most enrolled.
Right? And they'll get hired, but they're gonna get hired at the dang near the bare minimum. Their negotiation leverage aspect is only as good as their value of program management coming out of college, to the extent they know how to really talk to people, right? They need to know how to talk business, right? Because if not, they're gonna try to they're gonna try to railroad our sisters, right? Again, y'all know the whole statistic. The same sister coming there overqualified, right? And the right talking points. A counterpart to her, a diametric opposite, and the white woman come in less skilled, less organized, less all that. She's still gonna get she's gonna get hired and a pay raise. See, that's the part of America people still got to shape shift around and realize that it's no getting around that. Matter of fact, off topic. The jury selection that just happened down there in Brunswick, Georgia for the Ahmaud Arbery case. It's stuff like that still happening in 2021. They got 11 white men. Yeah, you mean tell me there were no black men in Brunswick that's peers to Ahmaud Arbery? They got 11 white men on the jury. Make that make sense to me in 2021. And they had black men on the pool to be selected from. They just the defense just dismissed them, and the judge allowed it.
Oh.
Kyle Rittenhouse in Minnesota, off topic, but I'm using this case study. Same scenario. The judge pretty much came out and told the prosecutors that they can't use words like victims for the people that got shot by this wild beast savage little white boy.
Oh.
They can't be, so dead people can't even be on trial now. They can't be called victims. And the judge dismissed a black juror today because he made a statement concerning this. Couldn't make this stuff up. So again, getting back on topic, the reality is that, you know, we already have a lot of different things we got to deal with every day, day to day. Body politics is just under the water right now. You had a Congressional Black Caucus that literally sat there and parlayed into the ideal of giving immigrants $450,000 that were displaced from their somewhat loved members that came across the border illegally. Where else do they do that anywhere around the world where they will pay an illegal immigrant money or restitution for trying to break into their country? Do you pay somebody money to try to break in your house to steal your items? Do you say, hey, look, bro, I know you tried to get in here and get the bag. Yeah, good thing I ain't hit you with this, you know, this pistol. Let me go and give you some. Let me give you some money as a parting gift on the way out the door, because you know apparently, you know, I must have stopped you from being able to break in my house. And I know you really want to break in here and show your strength, right? Since I stopped you, I'm gonna go ahead and pay you for your your losses. Make that make sense to me. They was considerate, and it's still on the table. Today they tried to come out and downplay it, say no. Joe Biden came out and said, well, no, we're just going to give him $450,000, but it's still on the table. These are civil lawsuits. Again, this is the only place where you can come and sue the people that you're trying to break into their house, and the court will take on the case. Are you kidding me? Again, try that in Russia. Try that in China, right? Heck, try that even in some parts of Africa.
I think you lose a foot in Africa.
Boy, they finna put them tires on you, set it on fire. Better watch it. All right. See, jokers don't understand the extent. So you're dealing with a lot of stuff. Again, off topic, but on topic, because it's case study, it's a psych eval, right? It's realizing what you're up against and being honest with yourself to realize that you're not living in the fancy world to the extent that you know how to deal with all these different moving parts. Because the name of the game is survival, self-preservation. You got to find a way to keep inflow of money, income, revenue stream, or resources at your disposal at some point through, physical resources, right? Again, barter system, whatever, and or the ability to go out there, produce or acquire income producing assets. Meaning your money is working for you now. The whole point of this. Yeah, the cost of goods and services are going up, but guess what? At some point, when they get through all the talking points of saying that, okay, yeah, we got that issue coming up, but we plan to remedy it by what? Raising the price of our goods and services. Guess what happens to their books at that point? Once they get through the shock and awe aspect, that means the margin increases. Y'all with me there? Margin value increases now if you have lack of supply. You can have, they call it pricing power. You're going to pay for it one way or the other. They figuring that out. People gonna pay for their stuff one way or the other. Sister Shawnee gotta have them Oreo cookies, right? Sister Shawnee gonna be, look, I ain't finna make them cookies. I pay that little extra, right? I pay that little extra at the store to get it. That's how these companies gonna get that extra little bang on their back end. So stocks at some point gonna say, okay, well, all right, well, guess that's expansion of margin for less, work that we actually have to put in to extract the value we typically would do on a rolling scale perspective. We'll take it. They're making more for less. Essentially, like y'all, like we talked about earlier, going to the store to buy toilet paper now or a roll of paper towel. It's the same package size, but you're getting less, meaning the value what it looks like, but you're getting less. You're getting less on that ply value of it on the roll. And it's at the same price, if not a little extra higher. They know people ain't sitting there going through these things minutiae and checking the weight, looking at the fluid liters and the actual weight of man. People rarely do they do that. I do that a lot when you do with food because I'm like, when I change eating habits, I need to see what's every ingredient. I need to see what's going on. I was all into that, still am, but you know, it's a good education though. It's to really see how the businesses work in that perspective. But here we are. So assessing risk. So that's where we are in the grand scheme of being able to map market. So really quick, I want to be done at least by 9. Give us a good time to get out of here for a good time for a change. Let's go look at some of these charts really quick, right? Let's go. They say let's take it to trial, right? Let's take this thing to trial. All right. So matter of fact, let's start off with this one here. Let's start off with this right here. Right. Let's start off with this right here. My oh my. Right. And I'm saying it because I was like, it was like I was so close to pulling the trigger on them in the earnings. I was so close because the sentiment was just like, oh, this is just got to come down. It's just overly bought. I said, oh, when it's like that, when it's overly bearish in the earning, buy you at least one call. At least buy one call. I was so close to buying a $200 strike too. I was so close. And then what happened? They dropped a number for earnings, and it was a short squeeze, and the mother of all short squeezes. It essentially went from 170 up to like 540, somewhere around there.
Wow.
On earnings. So everybody that bought the 200 strike price, I was in some room when we were talking about, I'm not making this up. And I was in there contemplating, I should buy this 200 strike, because it's just too much bearish. Everybody's like, it's coming down, it's coming down. I'm like, man, bro, you got to realize what's going on here. Yeah, we get it. And this is all within the fog of the whole Hertz and Tesla, conversation, right? Hertz want to buy 100,000, Tesla vehicle Model 3s, right? As a fleet purchase. Like, okay, yeah, that benefits Avis because it's a sympathy play. It's also they're dealing with the pricing, high cost for vehicles and all this, so they can raise their prices and rates. This whole thing we just sat there talked about. But long story short, oh man, mother of all squeeze. So the $200 strike calls, they were up, but what was it like? Oh gosh, what was it like? Man, it was something crazy. I'm like 10,000, 14, 15,000%, some crazy number like that. I looked at a couple of the options when they were happening. And one trade, so that 200 strike call at the time, I think was priced at, was it like $200 or $300 a contract? Maybe 400, somewhere around the $300-400 a contract. It was worth when it was all at 530. Well, it went to like 540, whatever. But that contract was worth like $30-some thousand, 20 to $30-some thousand. Are y'all hearing me?
Did it pop up on a black box scanner?
Yeah, well, intraday after it happened, because this was the earnings, right? It happened on the earnings, and then it jumped and ran, right? But it ran. It was on everybody scanner when it went to running. And I was just sitting there. I was sick. I was literally sick, y'all. I'm not gonna lie to y'all. Every now and then I had my human moment. I was sick because I was sitting there saving that bag. I was looking at this one, and I was looking at some other. I was like, yeah, I should buy at least that 200 strike call. I'm serious. Matter of fact, I can show you why I was thinking about buying at one price, and I canceled it. I got it on my, your broker say that when you're trying to buy it, you cancel it.
When you say you saving that bacon,
I was saving that bacon. That $400 would have been like $30,000 plus $40,000.
Wow.
Those kind of moments, right? You see, this is the part of the game where y'all know this stuff because we in it. That's what we're learning to be better at it. When we're assessing risk and the opportunity that afforded to us, short term or long term. This is short term, of course, because it's an option play, because we get it. We understand the rules of engagement if you're trading a stock into earnings. This does not, you just wake up and just go trade a stock in the earnings, right? No, you have to put in the work. You do your due diligence. You're going to go through it. I think I closed those tabs already. I still may got some of the tabs when I was going through, but I closed them, I think, most of them. I was sick, once it ran, I just closed them. I do that sometimes for psychological help, right? But that was easy money because it was a simple hedge. The whole sentiment that was in a lot of the bloggers from hashtag Twitter and all that, oh, it's got to come down because it's already overbought. Look at the stock. Look where it came from into earnings. It was already stretched out. This is Avis. Seriously? A rent-a-car company? Avis? The thing was just trading at, couldn't make this up. It was at $6 During the COVID lows, $6 Avis car rental. Hertz, all the Hertz went under, right? Remember Hertz went under. They went through restructuring, a Chapter 11 restructuring bankruptcy. So convince me how Avis is any better, right? A little dusty, I'll leave it alone. And the stock just, it got a part of that meme stock crew, right? Wall Street bets, they started getting in it, float was low, it was overly shorted because they like these companies going under, they going bankrupt. Wall Street crew began to save it, try to save them, and then guess what? They just ramped it up. It went from 6, to the 20s to the 40s, hung around the 40s for a little minute, ramped up to the $80 area. They kept it there for a good little minute. You can see the consolidation there. And then got ready for earnings, into earnings, it ramped up into earnings. So September 21st, from that point, again, the whole idea what used car prices going up, inflation readouts start coming out. That helped companies like what? Avis and Hertz and all these little, because again, they can charge more for rates, right? Ain't nothing people could do about it, right? It ramped from basically $90 all the way up to over to 170. That happened before earnings. It literally doubled 100% basically from that point up to like 170, 180. And then on earnings day, lights out. I mean, it's, yeah, I'm still having flashbacks. Y'all got to bear with me for a second. I might have to have a moment of silence. But this is what I'm talking about. The risk factor in this was just pretty much minimum to the degree what I was willing to, play in this in terms of investment hedge or just for the idea of the move itself. We didn't know it was going to make that kind of move. Granted, we didn't. But I did assess the value that we could easily eclipse that 200 because the short interest going into earnings was still pretty high because a lot of people turned bearish. And the IV was just, sometimes the IVs are too high. You get what they call an IV crush. Market makers will do that sometimes if the numbers, don't come out, staggering on one side or the other. But for the most part, people feel like they had a lower guidance, which they did. They had a lot of revisions going into earnings, whatever, right? As a matter of fact, run over here like really quick, just 2 seconds, right? Show you this here, right? Now, a lot of these analysts did their targets after the fact. I wish this was the one that before all this stuff happened, so you see the true ideal of what they was banking for at that time. But just now, I seen that the market said you got 3 sell orders. Why? Because market fund managers know right now. Oh, you got to sell it now. Like if it went to $500, you got to sell it now. So all these sell ratings came after the fact, for the most part. But it was not that going into earning, right? So you talk about again, it's still sitting on the smart score of 7, so it still has some value to it. They still saying that Avis right now is still worth at least a minimum about $120 a share. Are you kidding me? Now here's where it gets crazy. See right here? Insider activity. 35 plus 3 million shares were bought headed into the earnings report. See, I look at stuff like that too. Headed into earnings. Somebody knew something. Not to the extent that move, but they felt good about the company, if nothing else, continuously squeezing based upon all the issues with supplier and all that, whatever. But all the people right there cashed out crazy. You can imagine what they sitting on. Especially if any of them had stock options, right? It's crazy, right? It's just like, okay, man, but this what makes this stuff awesome because we get a chance to, kind of move within the spectrum of these kind of rarity opportunities by being initiated. And we understand the value of the risk involved, right? But again, these are what they call the astronomical gains that come based upon knowing how to really map out a plan procedure. Elizabeth was sitting there contemplating it. Pulled the trigger on one, canceled it. I said, man, wait, no, I need to probably think about buying the 200. And whatever. Right. So now they're saying, of course, now the analyst, price is around about what? $108 at this point. It already happened. No big deal. Right. But that's markets. That's markets. So you basically retrace dang near half of the move. You back down to 272. You're a little bit under the linear regression line here, barely. You got there, you fought at it, right? You got there, you paused, which we know how markets at. It paused at or around the linear regression band to the T. Couldn't make this stuff up. Now look at that. To the T, it paused at that linear regression band. So that was your quick retracement bump, or what they call a retracement trade for whatever value that you're gonna get back to the upside. It bounced from basically 280-ish ran back up to, it hit like what, 310 the very next day. So that's about another, what, 30, 40 point, 30 point plus move back to the upside on the retracement or the dead cat bounce, basically, if you want to say that. And then, of course, of course, of dead cat bounce because you relinquished that support today and went under today, which obviously, right? Again, that thing, it meteoric rise. It went from 180 to 540 some odd dollars. So yeah, the short thesis is intact, but guess what? You're gonna pay if you're doing on the option side now. It's them contracts are stupid expensive. Stupid expensive. Right. But again, look, it can easily come back down. Let's say if it even downtrended back down towards the bottom band here, within the value of on the daily side, Coach said to put it somewhere around 225, 250-ish, 230-ish, maybe, whatever. But that move alone that preceded it was just golden. That's a lot of money for a lot less. Risk assessment. Another one, real quick. Right? This one here was money. Right? I don't know, did anybody catch this one here? I didn't get a chance to post none of this stuff. Man, I was been busy this week. Sorry, guys. But I was on this one here. Digging into it, financials. They do online, basically they do online, like an online campus subsidiary. Go ahead, somebody say something.
Man, I was gonna pull the trigger on that, but I
They were
didn't.
dirt cheap. The contracts were dirt cheap, dude. They were dirt cheap. I read
think,
through all the little reports. I was just skimming through all this. These people in trouble. Kids going back to campuses now, right? All those are good
Did
business,
they have
but
earnings? What was it? Wednesday?
This just was earnings. Yeah, this was just earnings. They just had earnings. No, this was on the first. This was on the first.
Okay, the first was Monday, right?
Mm-hmm.
I'm trying to see what I bought. What I bought Monday.
See, these are the ones you had to swing them into the earnings. You had to swing them into yeah. So
they had earnings Monday morning.
You see it? You see it?
Let me see. I'm about to look at it right now.
This one here was golden. I recommended it for a couple people that was, and I didn't get a chance. I didn't put in the group. Of course, granted, I didn't. I'll be the first to tell you because I was just moving, still got a lot of stuff going on. I was just moving on the fly, so it was cell phone but scenario. But I was like, this right here would have made a lot of people a lot of happy because these contracts were like dirt cheap. Matter of fact, the $55 strike puts at that time were like 60 to 40 some odd dollars, if I'm not mistaken, a contract. That contract paid out every bit about 2,000 plus, near 3,000.
Go back up.
I was just like, yeah. These are the ones you just want to, because again, we don't do signal service over here. We just put information out. You got to do your own due diligence, of course, but this would have really made somebody Christmas really nice if they participate in that or whatever.
Okay.
Shopping.
Yeah, they had earnings after the close on Monday. Yeah.
Yep.
No, I didn't do anything. Oh, you know what? No, I take that back. I bought Under Armour calls the next morning, but I was probably doing something. But I wanted to trade one of these stocks, and I was choosing either Chegg or Nutrient, and I didn't get to do it. Mosaic too, they had earnings as well, and Avis was right here.
Avis was there. You had NXPI. You had on Semiconductor, because those were the two biggest ones, right? Because they was going to paint the picture about the semiconductor thing. They had earnings Monday morning, right? Early in the morning. And so the after hours session, Chegg was like, oh, Chegg, this is online. Oh, okay, but man, they finna be in trouble. Because people, they back on campuses, literally. Right? You can't account for this. And they already kind of got pre-warned out of their last conference call or earnings report that they were trying to model in the idea of trying to, somewhat, coerce kids to, or they figured that kids would still be more prevalent to want to use their services, even with kids going back to school, on a more safety side, right? The online side of it, than just sitting back in class, because what they realized that some of the data was coming out about check is that a lot of people were still using the service, but they were using it for the fact that they was able to kind of cheat, right? They was able to cheat all people's work in the networking side of it. And that was, I guess, a use case and all that. So it was a lot of drama behind it, whatever. But anyway, it was just, oh man, 30, 40, 50 bucks, you easy up, near $3,000 plus.
Yeah.
Those kind of scenarios. Right. And it's just mind blowing, the opportunity that you have, the amount of money. And that's per contract. Per contract. Those scenarios when you go out there and buy 3 or 4 contracts, right? 4 or 5 contracts, they only cost you 30, 40 bucks. You spend $200, you risk it. That's your risk assessment. You have a move like that. Now that, that value of $200 is now worth what? About $10,000, $12,000 off of 200 bucks. See, it's that kind of stuff. Right? I'm no stranger to those moments like that, because I hit a lot of them like that. I've hit a lot like that. Of course, I keep saying, y'all know my biggest one was that stamp, right? Them contract with 20 cents a piece. I bought 5, right? That cost me every bit of what? $100. I turned $100 into $8,000 on one option play, right? That risk versus reward, that kind of scenario. $100 turned into $8,000. I've been in some big ones before, but that was my biggest one for meaning, I spent a little bit of change, did a little something strange, right? That's why I say that a lot. Do a little, right? It's that kind of reality. And the risk was just mapped out strategically because they lost the contract with the United States Postal Service scenario. The whole issue back then with Stamp was dealing with that.
Dang, man. I wish I would have looked at you too. Got Zillow though. Zillow went down just as much.
That's why I say, but we talked about Zillow. We talked about that in the last session. It was like they're in trouble. And they got earnings coming up. I was specific about it. Again, of course, like I said, we don't give alerts over here. We don't tell people what to invest in, because that's not what we're trying to do here. We're trying to be all equally initiated in our engagement in terms of our due diligence to be able to map out opportunity, right? That's what we say, mapping out your money, right? Risk assessment, long versus short, mapping out your money. This is an aspect of what we do. You guys, I think we're talking. Go ahead.
Oh, my bad. I was just gonna say I forgot they had 2 tickers. I should have got both.
ZG and Z. Mm-hmm.
Yeah,
you could hit both.
Got both. Yeah.
You can hit both, or you could just do 2 contracts in the same one. Because like Google and Google, right? Google and Google, I should say, right? And Google, right? Or Under Armour. You got UAA and UAE. Was it UA? Yeah, UAA.
Right.
Right. So these are just
ZG, I think.
ZG for Zillow. Right?
Yeah.
These are these moments, guys. This is what we're talking about. Now, these are short-term thesis based upon the value of the risk assessment that we're talking about here tonight. Right? But these are centered around what they call binary events, earnings, etc., data points, news, whatever. Turnkey scenarios in a lot of ways. All the forward information that came into this was pretty much letting you know what was going to be the deal. I'll give you another real quick here. Saw this coming.
Oh, yeah.
Saw this coming.
Ball puts.
I sold some of my Moderna literally the other day. I show y'all a screenshot, everything. I said, they finna be in trouble. Couldn't make this stuff up.
They dumped.
Could not make this up.
Why they dumped?
Got too many issues,
earnings,
man.
Oh, they're
earnings.
And well, because they already had wrote the gravy train into it because of the fact that they had priced in a lot of the money that was coming out of the government. They had priced in the stuff on the back end of the vaccines that were already accounted for. They got caught up in the limbo with trying to get all this stuff, this booster shot stuff approved. So because of that, that put a damper on the money they were trying to price in, be it they had got it a lot earlier than they wanted, or from the value that, let's say, Pfizer got their submission, right? that put more pressure on Moderna, because Moderna was the most overbought one of all of them, right? Now it's the prize in terms of the most stringent or strongest vaccine, granted, but because of that, they still dealing with that myocarditis scenario, right?
Yes.
That's the one issue that Pfizer, even though it's not stronger than Moderna, that they don't have to at least deal with that. They got these little side effect scenarios too, right? All the other stuff, but it's not that. And that puts a damper on, meaning the use case, how many people can at different age groups can use the Moderna in relation to that. And then they starting to get a boost, and you already got the strongest stuff on the planet. Look, they're just being greedy at that point. So they shot their own self in the foot by trying to be greedy, literally, which they could have just been focused on what they've already got and ramp their sales into earn and worry about that on the back end. They tried to do a pause on that. That hurt the sales, that messed up the EPS and all this stuff. And the stock, was already under pressure anyway, right? For just being completely just, literally overbought, right? In a lot of ways, to call for what it is. And it, there was a day to decompress. Now, this is good because guess what? We still got a gap down to what? 260. Everybody waiting on that 260 gap. I was talking about 260 gap when we had that first pullback down here when they thought they weren't going to get that AdCom submission for the booster shot. I was like, man, we break this here. We get down, maybe we could possibly fill that gap, right? It didn't happen. They got to ramp back up because, everybody kind of priced in the idea that we knew that, Dr. Fauci and the crew was going to get in the CDC ear, and all those people on the board and the FDA was like, look, okay, if we did it for Pfizer, we got to do it for what? For Moderna. Why? Because a lot of people still may be scared to do what? Mixing of vaccines. Even though they said it was safe that you could mix the Pfizer and the Moderna, some people like, I'm not doing that. So they were forced to what? To go ahead and give the go ahead for Moderna, even though they first said they was going to do it, then they put a pause on it because they were like, no, we're dealing with this myocarditis for people that are younger, under the age of 30. That's a problem still. And they knew the data was already messed up and flawed, but this is how this. All right, I'll leave that alone because I go on my soapbox. I'll leave that alone. But this was already kind of foretold. So guess what? The nearest gap is still sitting at right around what? 260. I can assure you that people bought a lot of those 260 calls. I was looking at all this stuff ahead of the earning because they were planning for that potential what? Lotto played that if we get that what? That 260 gap fill, then it's what? We're comfortable. Meaning we did what we said we was going to do. And you could have got it at a cheap price. I'm finna show you. Look at it. See right there? These were the ones for what? Yeah, that was today, right? That's all they coming in. Yeah, just make sure on the right one. They was buying up those 260s. They bought up the 270s. Look, I'm showing this from the open interest, right? You see the open interest higher up on the 300, obviously, right? It was at 339 before it dropped, right? Literally, I sold some of mine at 339. Literally on the dot. I sold around about 12 o'clock yesterday. I sold, I think, at least a third. I sold a third of my Moderna position at $339 a share. So it was worth it, right? We've been riding things since what? The high 50s and the 60s, right? I just been adding every month, adding in between. It was time to take a little bit off the table, right? Because I just knew the earnings, from my research, it wasn't going to be, wasn't going to be about that life. And so look at the open interest down there, 270, 260. See right there, consistently at 500, 200, 300, basically 400 at 260s. Even all the way down to the 245. Look at that, 441 open interest. So they were already, you see it? And this entry there, of course, this is after the fact, but the open interest basically letting you know what it was up. They was already starting to load up, at some of those lower prices. And the price of the contract, look at that, 300% on the 260s. Even if you bought the 260, that it made 300% today. The 260 made 300%.
Yep.
And see right there, that 44%, 44 cent change different. So that means that contract was basically what? About $10, $12 a contract going into earnings. If that, somewhere around there, give or take, it flips fast after the fact. You don't see it in real time. But it was dirt cheap. We'll say $7 to $10, somewhere around it, $7 to $10, $12 a contract, give or take. If that. Some of them be $5 and just be sitting there. But anyway, look at the returns on, they're just crazy returns. Right. So again, that's again a part of assessing the risk. In a lot of ways that we go by looking at that, you know, there's many different operative values that we use. Of course, everybody have a different assessment how they go about looking at earnings. Of course, some of the basic stuff I use is obviously earning whisper. Of course, to kind of see what's going on. They're the most reputable one when it comes to being able to see who got earnings that's going to be listed. So you have to fight through trying to figure out if they're gonna have earnings or not. They give a little basic synopsis of what the earnings may or may not do. Ahead of the numbers. You can buy the premium version. They'll add a little bit more extra data to it. Airbnb, like a lot of these companies that had earnings tonight, as you see, you can kind of get an assessment of what they did or didn't do, as far as their numbers or whatever.
They missed on bookings.
Yeah, on Airbnb, yeah, Airbnb. Of course, that was just people people using them now, whatever. But I mean, they beat on EPS and they beat on Rev, right? They kind of came close to being in line. They did really red on EPS, which is really good, right? Because they still trying to find it themselves, right? But then a lot of the stuff I've been telling you guys before is when you get into the Q3 and Q4 session of cycle of an earnings cycle, the one thing analysts are very picky about is guidance. And the fact that we are in a supply chain crunch right now, guidance matters more than anything right now. That's what hurt eBay. Guidance, right? They beat, but guidance. A few other scenarios like that. Activision, guidance is hurting them, a lot of these companies now. So Zillow, guidance, hurt them, right? They can't guide these houses being sold. Tell you what, they got all the inventory, came offloaded, they're in trouble. Right? They stuck. So they ain't out to clear. They are not out to clear. Just because they hit a point and people like it's gonna bounce. Not well, yeah, it may dead cap, but it ain't just going to be ripping all the way back up to the upside like it typically would do in a case like what Apple did and Amazon did. Not gonna happen. Not gonna happen. Right. So it's a lot of them tonight. So the one that I played tonight, just for the sake of it, right? I played Big Commerce, BIGC. Right? They had earnings tonight. BIGC had earnings tonight, right? Right here, this one right here, right? They beat on the EPS by what, 57%. Earnings kind of came in a little bit over. But what makes their story compelling is the fact that the stock was already beat down. They kind of fall within the space. They're the backdoor dealer that comes along with a lot of these kind of e-commerce players. They help facilitate, social media back server scenarios and onboarding of different things that help platforms run really well and apps and all that stuff. That's what they do, right? On the backside of that, right? So headed into earnings, the stock was just completely decimated, right? It was completely decimated. And mind you, this stock was trading over $100 plus, because the stock it's new stock basically, fairly new, obviously you can see here, right? It was trading over near $106 a share. And y'all know stocks when they IPO, they get beat down, they get beat up, right? Unless they just bought that life. It came down to, tapped out at around about $42 a share. It bounced, of course, came all the way back to resistance at about 692, and they moved there, as you see there clearly. Came back down to 45, like around about 43, 44, $45 a share. So you were basically at what? At the base support. There's your your back test right there. So when you're assessing risk on a short-term basis, what are you planning your risk for? The most nearest level of support, which is 42. That's basically $2-3 away. Make sense? So at a point where if they had any kind of value of growth or forward looking a growth window, this would be a notable opportunity to play at a level where you had risk literally at your back door, was basically right up on the back of your heels of your shoes. You basically at the floor. You got nothing but potential upside from this point, right? And I don't know if y'all don't know this. I'm acting as if y'all know this, right? But this company here helps facilitate a lot of the movement or the e-commerce side of being able to make monetize basic social sites like TikTok. How big is TikTok?
Pretty big.
Right? So guess what they do? See right here, Big Commerce unveils platform to sync products on what? They work with people like Google. Google Merchant Center at that. Could make this stuff up. Big Commerce launches ads and listings on Google. Right? I'm reading through all this. Right? Where's that one on TikTok? Where's that one? Shares rise noon. Blah blah blah. It's not on here. It's on. Where is it at? Is this the one? It's on another news. Some of these stuff I'm giving all of, but they working with TikTok as well. So they already working with Google, right? Mind you, right? They working with Google, right? TikTok, right? And it was already at a point of support where it just had to, we was gonna get a bounce one way or the other, right? They had the price right there. This was the price target going in earnings because it just happened after the hour, so it ain't changed. It's $77 what? Average rating value on the stock. At the low end, they were talking about 66. The stock's sitting at 42.45. And it just IPO, and it's working with companies like, again, Google, right? So this is me just giving you a little quick synopsis of how I do my rundown of potential earnings assessment. I'm assessing risk. All these are good across the top metrics, right? Moderate by increase. That means insiders been increasing and hedge funds been increasing, right? To what extent that could be determined, right? You still got some negative stuff in there, but this is good when you have green across top here at least. 5 neutral, give or take. Website traffic, right? It was banging, obviously doing what? January, because they just came out of holiday rush of last year. The stock just really IPO, so it was new. They had another rush going into what? Springtime. People, again, still shopping online, whatever. And then it kind of tailed off a little bit, right? They had some little issues that they had to work out on the backside, and then began to have a little increase going into what? Q3, as you see there, out of July into October, September. That's your little increase, bump up off support. This is showing you a support bump already on their website traffic. Y'all with me there? That's just basic assessment. They went from basically having what? 10% negative growth on website traffic from laptops. Desktop was at 9, mobile was at 10, right? And the price of value was at what? Negative 0.26%. It increased into August, in the green again, and it increased into what? Into September. Obviously into October, which is your what? Your 3-month assessment of a quarter. That's growth. Somebody going on the website and using it for something, and you already. So I'm just making a basic step, and this is for me, without me going deep. I'm just using this for y'all to see exactly how I'm mapping this stuff out, right? And so again, analyst stuff. We know that stock price. We through risk assessment. Well, risk assessment is just basically what's saying what are they? They have any kind of abnormality risk assessing ahead of their earnings report and what they will be. Right, so they give you a little assessment of some of those things, right? You can weight it against where the stock is at, and then what they're doing falls on the financial side, whether it matters or not. Right? Earnings, again, that's going back to earnings analysts. So this is people who are doing what? Upgrading the stock, 6 months out ahead of their latest earnings. Right? These ain't the most accurate one because it's not giving 3 months, 2 months, but it's just some of them, right? You still got people holding the stock, got holds on it. Some of the people y'all know, Morgan Stanley, Citigroup, whatever. Right. This is just a basic, quick assessment, though. I'm just giving you the basic. Right. You have some selling that happened also with management ahead of earnings. That's troubling. But if it ain't a whole lot, these might be scheduled sales from management, and you can look that up. If they have scheduled sales, you can look it up and see whether or not they will schedule that through the SEC filing. Right. Hedge funds, again, same scenario there. Whatever. Bloggers, they give you a little idea what the bloggers are talking about. Meaning, publication. Right. See right here, last month, seeking out finally, is it time to buy the dip? Right. Big e-commerce, the fastest growing oversold. Right? Emphasis on oversold e-commerce stock is on sale again. Right. That's been 2 months ago. Right. So that's the latest on publication news, whatever. Right. If you come down here, look at news. Right. What's going on in the news? So you got some expanding local partner ecosystem. That's very important because we talked about Google, TikTok. Right. Growing a DTC brand. Right. Increase the revenue by 39%, being hired by the company, looking to build, whatever, right? You see right there, I'm already clicking on some of this stuff, right? Let's show you what I was looking on earlier today, so that way I ain't making this up, right? This is me assessing it before earnings. And I was on other websites too, but this is what I just clicked on this particular tip rank, right? See right there, BitCommerce launches TikTok advertisement coupon program to help merchants drive growth, unlock more revenue. Right. So, you know, it's small stuff like that. And again, those contracts were, which, you know, I'll show you really quick here. We're not that expensive. Right. But this is the part of the business aspect of investing in trading, or trading in this case. It's just an assessment, guys, no more, no less. This is me assessing risk, right? So the stock was based around $45 a share, right? See right here, $50 strike calls, sitting at $1.95, right? They were around about $1.70, $1.80-ish before the bell, and it settled at around about $1.95, whatever. You know, this stuff is never accurate in terms of real time. In the money ones were the 370 around about 340-ish, somewhere around there, 320 before the bell rang, if you bought in the money. Right? The 55 strike was sitting at roughly around about 90 plus 87 before the bell. It went up and down a little bit and it settled at $1. Right? There might have been the last people got in wrapped for the bell. Who knows? But you know, these are, you know, 2 week, you know, you got 15 days before they expire. Right? Of course, you know, at the point I bought in the money, right? I bought the 45. They were 380 contract at that time, and I bought it throughout the day. Right? 380 strike. So after hours, as you see here, the stock is up to $52, you know, 22 cents. So right now I'm in the money by 6 points plus. Has to hold, of course, but that was my thesis. That's my whole mentality. If it holds at that point, of course, you can do the math on that. Yeah, that's, you know, roughly around about what, $400-500 plus, you know, give or take. Might be a little extra. It depends on the volatility. You know, what's the level of the IV when it's on. But the IV was going into was on that 75. That's pretty good. It's not overly extensively high, like 100 plus, like some of these companies do, right? So a good IV going into earnings around 60, 70-ish is good. 80-ish possibly, depends on the company. But you want to be around about 60, 70 if you potentially can, right? All right, so that's the assessment with that. All right, so again, that's just a part of assessing risk, using the charts, using the data. Again, all this stuff is right here. I mean, again, this is a part of you mapping out your what? You're mapping out your money, right? So, of course, you're using this for bread and meat. This is the extension of that reality. The same way you were building a job, you know, whatever, right? Doing what you're getting paid to do. Or if it's an incentive-driven job, you're doing a little extra here and there to gain incentive points or extra commission, right? Troubleshooting opportunities, right? So yeah, so you can see yourself doing this on a natural basis in that regard. And yeah, you are more, you know, rated to be able to handle those big boy type or big girl and big boy type of what, you know, risk assessment scenarios in life, period, in general. Because it puts you in the mind of, again, you're doing CEO type of work, executive type of work, right? So not, again, outside of you guys' wheelhouses, once you begin to learn all the tools that makes this stuff so great. Right. So again, same way you see these stocks, you know, during this cycle, that, you know, the third quarter is always the firework, you know, where the fireworks get kicked off at. All right. Of course, you see Airbnb, you know, in the earnings, all this stuff like that. They dealing with a whole lot of. Let me put on the extended hours here tab. Or it should be already attached, I guess. Let me see. Yeah, it's already in there. All right. So you see what's going on, right? So it's basically about flat. It sold off like crazy. We're all the way down to 169, right? From 170, so dropped 10 points, rocketed it back up to 185, and then came all the way back to flat. So guess what? IV crush. Them puts and calls, unless you bought what? Iron Condor or Butterfly. That's the only way you're going to make money on that. Right?
Was that the Airbnb?
Yeah, Airbnb tonight.
Yeah, that's why I said market makers is gonna kill puts and calls.
Yeah. So they'll do that on something they did with Uber tonight too. Uber the same way. Uber initially, they on earnings, it pulled back, then it shot up, you know, wicked out. You see that 46, then it slammed all the way back down, you know, to 42, bottomed out, and then the conference call, you know, somebody must have heard someone on the conference call, got excited, because see right here, at 5 o'clock, what the stock do? That's when they had the conference call. It shot up. right? When it ramping back up to 46 and then, trail back down to neutral, at 8 o'clock. So essentially, I mean, they hold it, right? And because Lyft had earnings today, matter of fact, earlier today, I believe, last night.
Yesterday.
Yesterday. And Lyft did what? Lyft did what? The boom shakalaka, right? They move, and then after that, they pulled it back to the 200. They snaked around 200, and they used as a springboard. They held, apparently. Somebody bought that 200 up, and boom, you got like a little dollar pump move here on the back end of the day going into after hours on Uber numbers. Right. But yeah, so yeah, it's all relevant to scenario because some companies are affected with some things over others, but this is a part of the game of assessing risk. Right. So just putting it out there. So whether you buying a stock long, whether you plan a certain thing like an earnings play, whether you're looking at the different asset values of markets, and you're assessing risk or things of that nature, it's all relevant to the ideal of what the macro picture already looks like, right, in your neck of the woods, and what you may be getting off your news sources or your news reels, right? What do you use for being able to it's like amalgamating all your different news sources, right? Your publications and primary sources. That's just a part of what good due diligence and resources, research, excuse me, right? That increases your knowledge, your knowledge bank, right?
Right.
From that, I didn't even know I had my thing on. Right, hold up. Hello, everybody. Right? Say, hey, everybody. I had the camera out the whole time been grinding. That's what happens. You be working. I can't see the thing. But no, that's a whole part of being able to assess again, your again, the ideal of what risks are out there, so you can again be informed to be able to make good decisions, right? That's all this stuff is at the end of the day. And you're doing it at the extent where you're in control, whether you do or you don't, right? You have the power to make that decision or that executive decision, right? To me, I think that's unique because again, it puts the power of this in the hands of of you all, right? There's no other person separating you from opportunity in that regard. Again, big long term. When you're looking at some of these stocks in the investment world in terms of a growth story. Matter of fact, we talked about it on the last session. Matter of fact, when we talked about companies like I think that time Skechers had earnings, and we talked about Crocs, right? All these companies we talked about, and these stocks right now through the roof, right? Because we know like, well, they're gonna be hurting because of supply chain issues, right? Yeah, but once that initial sting get out the way, because earnings, Nike had earnings, what their stock do? It was flat to down a little bit, and then after that, they just started buying Nike up. Why? Because they knew at the end of the day, this is still a good moment where guess what? They're gonna work through that in their mind, that supply chain issue. And they want to be able to get Nike at they consider to be a discount price. Nike stock been on a tear since their earnings release. Pretty sure y'all saw it. We talked about it, and we talked about Crocs just next level, right? Crocs next level, right?
Yeah.
Look here.
Yeah.
Couldn't make this stuff up, guys. I'm gonna show you this really quick. Let me get up this 5-minute chart. Be a scroller forever. Now, let's go to the 4 hour. Let's do 4 hour. Right. Let's do 4 hour just in case and we get ready to get out here too, guys. We at that 9 o'clock hour. I say I didn't want to be on too long. I want to make sure we kind of get in and hit some very potent points. Get on out of here. Right. So really quick here. Let me go to daily because I forgot all this. I have my chart set up out. Yeah.
I saw that.
Really quick here, guys. Really quick here. Tighten down everything. All right. So really quick. So right here. This is how we mapped out Nike. Coming out of the previous earnings, which we see that we got little bands up there, right? Right. Basically Fibonacci bands, right? 618. We know 618 is the gun line for most of all Fibonacci retracement levels of a stock into earning, out of earn, whatever. Most people use the Fibonacci's, right? It's a good assessment, right? So that 618 became to be obviously was a great level. Now the 0.786 is a good one too. But inside that 786 and that 648 are really good areas of support for stocks if they're going to be a bounce in and around any of that aspect, break down or breakout. You want to look for stocks to be at around that price or within that window. And clear enough, it was sitting in between what? 618 and 0.78. As you see that I got my arrow right there. I got the arrow there for a reason. Right? This was drawn before this move happened. Now, mind you, we did this right here. Y'all was there when we did it. We did this move here way before this happened, right? And we was talking about the idea that, of course, they had earnings, going into earnings, of course, Nike, obviously in this case, they had to be able to survive, this move, being able to talk through their supply chain issues in a way where people just didn't abandon the stock. Now, because again, it's still Nike, right? At some point, they feel like they'll get these containers offloaded and people can get their goods and services. So, yeah, it just went down to 200 moving average inside that 618 and 78 field. Found support on the 20-day moving average on the daily, which is the great litmus test to use on any kind of assessment of a stock long term. We're talking about growth here. Nike as a growth story, but also as a short-term particular trade. And what did it do? It pinged off that 200 moving average, five times? 1, 2, 3, 4, 5. After that, lights out. People like, okay, yeah, we assess the risk. We know what's going on. Okay, we're good. Let's go. Market's already there. It's still been on the tear because we knew that, hey, we knew about what was going to happen with the whole issue behind the taper scenario. That's been known, right? It wasn't no secret, right? It was still good to hedge it though, because that's just smart. After that, lights out. Not only did you go and take out the old high, you made a new high. Or you took out the old high, made a new high. We barely sitting over the old high, roughly around about 174. We peaked above it. So guess what? As the saying goes, things that are strong tend to get what? Stronger. Especially when you have what? Price discovery. New high. Now you're in price discovery mode. There's no resistance points up there besides the value of the market makers that you see on level 2. That's the only thing you work with. So the strength of Nike still has run room up to around about what? 180, 183, right? And they got earnings coming up again, right? They got earnings coming up again here, around the end of the year, around December, 27 December. So you basically got a whole, dang near 2 months, close to 2 months to get ready for the next earnings. And people are trading Nike off this support point because they know what's getting ready to happen. This is what time of the year of this?
Another release. So Christmas,
Holiday season.
Thanksgiving, Christmas, holidays. They have another release date on the 12th of December also. I mean, not December,
27.
November 12th. And November 12th. Before that.
You say
they have a couple of releases like in this week.
Oh, you talking about shoe releases? Shoe releases?
Yeah.
Okay.
Yeah.
Yep.
And December and November 12th is another one.
On
so
top
I have
again.
Some calls. I have some calls for that date, going up to that date.
Nice. If you played up support, well, I don't know when you bought it, but either way, above at the 200 moving average or above the 20 moving average right here, all that right there money. All that right there money. Because again, those are the guidelines for a reason. We talked about trend lines, guidelines, and the ideal of using moving averages, rightfully so. Again, you stay in the trade if the trade is telling you what, stay in the trade, right? Until something crazy happens, you stay committed to the opportunity, let your money work for you. This case right here this was a given. Off the 200 moving average had this ping, 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 ping. It gave you the buy opportunity. It stayed within in the field, the value of the 618 and the 78. It didn't break down. We know we're not going to see that gap fill anytime soon, because if Nike would have did it, they would have did it on this last earnings report. They did not. They did not close that gap. You're sitting at 156, 157, 158, somewhere around there. It could have easily came down and tested that 130, 130 serial. It did not. It held. It just went right back to 100 moving average. It went back to its trailing 12 TTM scenario, 12 trailing month perspective based upon that of the 200 moving average. In this case, it bounced and rolled out. There was nothing else to discuss about in terms of Nike. So that was easy little buy.
Closer. My calls are closer to the high, so I made some ice cream money today. I put it into other options.
It's all right.
Yeah.
No, again, you know, profit is power.
Because those
That's
are
how we look at it.
expensive. Those Nike options are definitely have shot up now. They're very expensive.
But keep in mind, anytime a stock is on the uptrend, increase in premium going up with it too. Especially if it's a high demand stock that gets a lot of what? Open interest, you know, and just day-to-day volume, right? You're gonna pay and they say you gotta pay to play at that point, especially if you're day trading it. But nonetheless, that's a part of what also assessing the risk. You see, like we talked about today. But that's why it's better to also the front run when you can too, right? Get in early before a lot of these moves begin to happen, because into the stretch of the move, again, more people are now coming in too, which is increasing the pot, which also what drives up the price of the premiums, right? Which is typical, which nothing that we don't know about. But you know, again, this is the part of where we say the strategic point of being able to get in ahead of the move or right during the beginning of the move beginning to break out, because we've already kind of went through all the idea of assessing the risk. There lies where the magic at, right? Again, markets move in what? What kind of ways do market moves in? What kind of ways do markets move in? Anybody?
Sound waves.
Sine wave. There it is, right there. That waters of noon. We talked about it before. Y'all supposed to be all this, but waters of noon. Where my Kemet family at in the house? Where my Kemenites at, right? Or the Ramesh, right? I'm gonna call it really. I don't use that Kemet. Where the Ramesh family at in the house, man? There's no waters of noon right there. That's our symbol right there, man. Y'all know this. That's your support all day, every day at the 200. You ain't got to fight that. If you're assessing this, you ain't fighting it. That's support. That's 200 moving average of all things too, on the daily, and you bounce. And the idea that you going into a holiday season, cashing checks, and you got other companies out there that ain't even like Nike, but they out there just tearing it up like Crocs and man, like, bruh. People don't even want to see Crocs.
Yeah.
People don't even want to, man, they don't want them problems.
I
Right?
saw the Crocs and I forgot. I think I forgot to buy it.
Crocs chart look just like Nike chart. Am I lying? There it is right there. Look at that. There's that pullback. Actually below the moving linear regression band there. That was definitely about that point, because Crocs just already showed stability. You had a gap to fill around about 120. Of course, we didn't get down to it. We got close enough. We got maybe about 124. I said that why I said, okay, that's all they're gonna let it get. Crocs is too strong. They not gonna let it just stay outside this band like that. It's been trading inside the band for quite a while, respecting it. Hey, it is what it is. Rampant. Basically from 124 all the way up to 177. Are you kidding me? Not kidding you. That's every bit of what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. About near 20 days. Right? About 20 days, you went from basically 124 to 177. Beautiful. Beautiful money. See, this is how we assess risk. This is how we do our thing. Yeah, now it's up at the top of the linear regression band. Granted, it's up there. Right? It's up there. So yeah, you might have another little blow top, or you may have some, some what they call some stabilizing up there, and potentially may pull back down and kind of consolidate a little bit. Because look at the RSI. RSI sitting at around about 73. Momentum squeeze sitting at peak momentum squeeze up here around about 27, right? In relation to that, the SP 100 still sitting up there 2 quarters high. So yeah, expect for a little stabilization up here. If you don't have a blow off top the next day or two, expect for it to kind of stabilize and probably pull back down towards that mean line potentially over the next week or two, possibly around about that 162, 163, 164, 165 area, maybe 166, right? So it may offer up an opportunity to maybe get in on a couple little puts at some point, just as a downside hedge if you're not already long the stock, because I'm long the stock long term anyway, personally. But just an assessment of that value of looking at the risk. That's assessing risk, is it not? It's extended. It's overbought, right? Made a big move, right? If you don't believe me, look at the put volume that came in today. Not making this up. 4,000 puts was bought today, right? Open interest start on the put starting to catch up with the call side a little bit on open interest, because people saying, okay, it's extended. Let it pull back just a little bit. Maybe the 166 to 167. The 170s, they'll buy those up, right? Matter of fact, look right here. Let's see what they're buying really quick here. I'm almost certain I know that's what they're buying because it ain't hard to see this stuff when you look at the chart. All right, but look right there. Yep, look at that. 160s, 455s, 165s, 452. Excuse me, 650, 656 on the 155 sitting at 12,000. Those were bought today, right? But the open interest right there, the open interest on 160s, 165, 165, 25, 40, and even down to 145. So people thinking this thing gonna make a nice little pullback. Now, whether they get that or not, whatever. But I'm just playing purely on the chart. 166, 165, 160. Yeah, that's the window I would be trading in if I was doing it because they're not that expensive, right? $1 on the $1.30 on the 160s, $2 on the 165s, whatever. $3 on the 170s, right? I'd be more inclined to play them, the 170s, right? Give me a little wiggle room between the high, the all-time high, and potential, back down to that mean line support on the linear regression band. Again, not telling nobody about that, but I'm assessing risk. That's what we do. All right. So yeah, so a lot going on there. A lot that worth discussing in terms of how we go about breaking stuff down and going through the ropes of figuring this stuff out. That's how we do this stuff, guys. That's literally it. There's more other things to it here and there. Of course, you learn that as you go and learn how to put together your plan and go through all that. In terms of how your risk profile, when we say your risk profile, meaning what you can account for, you personally, right? You the individual, what you can account for in terms of being able to feel good about, where you invested your money, how you invested your money, to the extent of, the growth story, short or long. That's what this stuff is at the end of the day. You are in control of this opportunity. You are the banker, right? The financier, you are the client, you're all that, right? The company is just the financial vehicle, right? To get you from A to B. As we like to say, they're the financial vehicle, right? So it's a lot to kind of let, permeate the psyche a little bit there. We want to be better at assessing risk. We want to be better in terms of our due diligence. In essence to that, our discipline, right? Because that's where the risk management or risk assessment value, it surrounds what? Your discipline. Not rocket science, right? This is a disciplinary game plan where if you're running a business, you're not going to let people just come in and just take items off your shelf and just walk out without paying for it and say that's okay. Make that make sense, right? That's still a part of assessing all the potential dangers of risk. So you got cameras up, you got ways to protect your goods and services. You're trying to protect your investment, right? Your business, it feeds you, it clothes you, it shelters you, it provides for you. So it's the same thing when you think about your money. Well, your money's doing the same thing. That's what it's here for. It's to protect you, shelter you, give you solace, and map out an opportunity for you to have some kind of value at leisure in life by utilizing it properly, not blowing it just because you got it. You're using it structured, in a structured way, right? These assets, these different stocks, these different asset classes, forex, crypto, binary options, whatever, common equities, whatever. It's all within our wheelhouse, right? The rules of engagement only change through the minutia of use cases, right? In terms of how everybody else sees them, right? A bit of technical store more so than it just being a currency exchange store, of it being a fundamental store, and technically because it's a common. It's all synonymous with learning how to do this stuff at a base level, right? So that's what makes this stuff great, right? So you guys should be, a little bit more focused. That's the whole purpose of these sessions, to kind of give you a little bit more clarity and focus on learning how to look at, at each individual scenario from a very, a very focal lens, right? When we talk about, especially on the short term, because you're trying to play it into a whole lot of other people's psychological scenarios into a short-term trade and dealing with the company, what they can and can't do. But on long term, you already know some of the growth stories are already intact with some of these companies because they're already kind of forecasting, consistently more than not how well they're doing up against all these different issues, whether it be supply chain, shortage of this, shortage of that, or surplus thereof, right? We got enough in our backlog to deal with this. They're telling you that in a lot of ways through their the SEC filings that you have privy to, their conference calls that you definitely have privy to. None of this stuff, you don't need no accounts, no green card, no none of that to be able to assess this stuff. You just have to really put in the work and the patience to go through that stuff and be comfortable doing it because this is our work environment. Yeah, you may still also work somewhere too. That's fine. But guess what? This is also your work environment. You're the boss of your money. And that money got to go out there and perform one way or the other, right? Be it margin, be it cash accounts, be it, whatever. You got to be able to boss it properly and thoroughly, right? So, yeah. So, a lot that we discussed tonight. So, the Fed hedge the aspect, or the last part of that is just that what it is. The Feds have pretty much told y'all what they're going to do. They pre-warned everybody end of last year into this year. The idea that we was going to get a taper coming out of basically after the Jackson Hole meeting that we got in August, September area, that they pretty much said that, we began to assess it. Now things a little bit different because of this, that, the third, yada, 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 whatever, doing what they always do. And at some point, we may begin to want to taper, right? That became ever much so prevalent under the last FOMC meeting that they had last month into this month that we knew they was going to taper, and we knew how much they were going to taper. So it was no surprise to equity markets. It was no surprise. Now, that doesn't mean that if you trading it for that binary event for that day that you may not want to hedge, right? But for the most part, the sentiment of the markets leading up into that was already in the stance that, guess what? It's still play ball season, right? Because until they take all the the money out the market, right? We good to go, right? Or we're still good to go, right? Here, I have an assessment here when we was talking about it. Into it, we had the horizon where we had a small pullback. Now I assessed that pullback to be right around about 455. That's what it was. It was no more, no less, right? Now this arrow is not accurate, but I assessed it at 455, right? Around about 455 area, right? As you can see there, it's right at that point. Around about 455. Because what I had, I bought the 455 puts, right, at that time, and I got them, right. They paid out, right. That was our bounce area, right. And from there, of course, the resurgence of the money was still in play. Matter of fact, is my screen showing? Oh, it's not showing. I'm not even sharing my screen. I'm sitting there talking. Ain't nobody called me there. My bad. Right. This was the assessment of the play, right? So we played into this rising wedge that had to pull back to around about 453. I think 453. So whatever. Yeah, 453.86. I got the 455. Whatever. Long story short, short story long. After that, that was your bounce. Right. After that, that was your bounce. Right. It was airing apparent at that point that we were still trending at or around the mid regression band. And if nothing else, after making the traversing off this low point of 426 outside the band, getting back inside the band, and the way that this relentlessly pumped the market, that was letting you know right then and there that they were still risk on the markets, right? People planning ahead of the holiday rally, quote unquote. They always have the so-called ideal of a holiday rally, whether it happens or not. After making a bullish stance in the month of October, which is typically subdued or somewhat not the best for trading, they made it a great month. They made up that they got out of September, and then some. Broke out, made a new high. Things that are strong tend to get stronger. Anytime you break out of in this case, this is asymmetrical triangle, whatever you want to call it. You break out of that, right? Or some people say a parabola, right? Right, whatever. You break out of that, you go up to the top here. Well, you break out of that point, break over resistance there. You break out everything from that point on. The price discovery, it's a bullish stance. And the fact that people knew that the Fed was going to say what we figured it would do, the 15 billion, but it was going to be determined about how they was going to display it, or at least, in my opinion, how dovish was he going to be? Was he still going to talk the talk of, what is transitory? We're accommodative still. We're assessing it day by day because the stuff he's been using for quite a while that's been helping the market because they like to hear him speak like that. When he came out and did just that and a little extra. Boy, did he kowtow to the stock market. It was just so easy. And the market that whole entire day leading up to it was at 461, just trying to trade and going sideways all day. So all that was just accumulation. Either way, it's still a technical move. It was accumulation sideways all day. And after the information came out, They rocketed it, right? They rocketed the market off that news, right? They rocketed it, right? No secret there, right? And to that moment, it just sideways, right? To slightly down and rocketed, and it played right off the 20-day moving average. So if you was watching this on a technical standpoint, they played up the 20-day moving average there, right at that aspect when the news came out at 2 o'clock. Listen on the dot, you see down there 2 o'clock, 1400, and it just stayed above 20-day moving average. If it was gonna break down below that, it would have happened already. It did not. They rocketed it, right? Sent it, right? As soon as it got around about 461.70, 462, slightly pulled back, started trending. I said, buying calls. I just started buying calls right there. I said, I already know what this is about. Seen this moving many times before. And after that, it was just lights out. Rocketed all the way up from 462 all the way up to like what 460, near 460, 65 and change, literally. So that was an easy little $300+ scenario in that moment, just intraday. And then the next day, all that energy was still what? Strong, because what they basically allowed to happen also was the RSI to kind of what? Flatline a little bit, even though it was still, overbought on the hourly, because, the market just been up like crazy. But leading into it, it gave it the kind of opportunity to kind of pull back down towards that $56, I keep saying dollar. The 56 price point of the I keep wanting to say money. I'm thinking about money. Of the RSI came down hit 56 basically on the this just day-to-day kind of going sideways all day, neutrality, which obviously helps the RSI. After that, it was launching time. So that was smart how the market maker played that. All it did was taking it right back down to that same point on the RSI that happened on the November the 1st, where we kind of somewhat just choppy going sideways all day long, right? Just double bottom, in this case here, just bounce, went up, came back, tested the area again, and held support, and just kind of closed out at or around, at a point where the market kind of was at near the highs, sideways into the next day, broke out of that little scenario and made a new high, and just kind of same thing, pulled back to that same level of support, higher than where you was before, and ramped and went higher. So all this was kind of foretold in a lot of ways that your assessment of risk was basically at a minimum, right? Or somebody writing on the screen, or Sister Shanika, you got that pen going, right? So that's all this stuff is, guys, in that regard. So now we got that out the way, that catalyst, quote unquote, if you will, on the hourly chart. Look what the S&P 500 at. You got a potential window up to 468, right? 467, 90ish, 468, going to say it. A lot of people are banking on 470. Market ain't, whatever, right? We still got to play within the rules of engagement, right? That's extra if you go that far out, especially if you got expiring contracts going to tomorrow. But that's just on the hourly. On the daily, same, or the 4 hour, you got a window up to around about 471, right? That's why they're testing at 470. They're talking about 470, right? On the 4 hour. And you kind of trading in trend. RSI still overbought like crazy at 78, but markets can remain irrational longer than you can remain solvent, right? Simple as that. On the daily, of course, it really begins to kind of make sense. You sitting there at around about 467, 70 area, 467, 80-ish. Again, still push around 468, if anything, if you make a push for it, right? Outside of that, it's extended. It's, RSI sitting on about 75 on the daily. So yeah, you got a little extra juice for a push for the next, if it just goes sideways tomorrow and pull back, then that's good for the RSI and that's good for the lunch to maybe go get that next week. But if it try to get it all tomorrow, then you'll know. If it goes up to tomorrow, hit that 467.50-ish plus 467.80-ish, maybe try to do a blow off top. If you're going to get that, then you best believe going into next week, at least Wednesday expiration, the put game going to be very strong, right? Just put that out there right now. I don't know what the future's doing right now, but we'll check it on the way out the door. But that's how you assess the risk based upon the chart perspective, right? Clear as day, as you can see it there, clear as day, right? It's up there.
Hey, but did you check out the put ratio right now?
Yeah, let's do that really quick. Going into tomorrow, matter of fact. All right, let's put in that old SPY, and we get out of here in the next, 2-3 minutes, 5 minutes here. Get out of here early for a change. I know some of you guys are trying to watch that Thursday night football. That's why I came out early. I said, boy, I'm joking watching that Thursday night football, but you're peeing on my time, brother, Davenport, but we like you everything, but I got to go watch my football. I got to get that football. I'm going to get out y'all here. All right. So tomorrow, of course, we got that's the fifth course in this case here. So let's go look at the put call ratio. So there you go. So you see right now, people are still very aggressively they were bullish on the intraday, and that's typically how it is on the call side anyway. When the markets are hitting all-time high, you still gonna have you should always have more calls than being bought intraday if you're in an all-time high scenario where you're having price discovery, right? The only differential is that when you start playing to the end of the week, especially on Friday expiration, you're gonna see the put open interest or that hedge position starting trying to build up because they're still trying to protect their the downside, right? Because they don't know if it's gonna if the music gonna stop and the stock gonna drop, right? That's why you see that put open interest very high going into tomorrow, unlike that at the call open interest. Why? Because most people didn't cash out them calls already. Not rocket science, right? They already cashed out. They run the register and still ringing it, right? So right now, where's the most heavy open interest in the puts? Clearly, you have a lot sitting at around obviously near at the money or in the money close. A little bit out of the money, 464s, the 463s, right? You see those are kind of very heavy, right? 10,000 plus contracts open. Then again, jump down. You see the 462s, 461, 460s, right? Makes sense, right? 460s are very high because it's even number. People like to trade around even numbers, right? It's $half, whole dollar marks. It's always seem to be obvious, right? 28,000 open interest there, right? Now let's go out a little bit since we are, we are into the week here. All right, let's show all here. So let's look at those 458s to 455s, right? At least down to 455s, right? Because I think that's a good little, a good little stretch in my opinion in terms of 10-point value, right? That's roughly around about let's see, 1% so close about near 2%, right? 2%, whatever, for the SP 500 to pull back, right? Now, markets are crazy. I'm seeing some wild things happen, but whatever. So the 458s, 17,000. So the 450s, so I figured the 455 is gonna have a lot of open interest. They're sitting at 4 cents a contract. That's a wild, that's gonna be like a haymaker, right, for tomorrow. But you can play it in the aspect that if you have a day trade to burn, this hypothetical, not telling you to do it. But if the market, let's say, it opens up, rockets up high, and then hits that resistance or hits the all-time high after that, the top of the band, and instantly up there, it doesn't stall out, and the market makes actually allow people to start taking profit early in the day before the market gets to the very end of the day, you may have what they call those kind of micro flush downs that happen sometimes when stocks are just kind of really overbought or extended the exhaustion of the buyers, and it'll rocket down, about 1.5, 2 points. In that moment, those premiums for those lower out of the money puts, if you buy them right at the right time, they'll flip fast, right? Because they're trying to assess the value that if you do have a constant drip from that point on, then these puts begin to be notable opportunity to play. So you'll get that little bump up. It'll go from like 5 cents to like 9 cents, like right away, right? So you pick up basically near 100% just on a fall that happens rapidly, but you will have to have a lot of them and then you have to sell it fast, right? I'm not telling y'all to do that. But that's how a lot of people trade that stuff when they're just trying to trade it radical throughout the intraday, right? But right now, again, looking at the open interest again, you see what's going on here. They have it around the 460s, 464s, 462s in that window there. Definitely within striking distance. And you see what the prices of them are. For tomorrow, 29 cents a contract, 30. So of course you're gonna need the market to move a little bit. If it does, those are easy to pick up about 60, 70%, 80%, near 100%. So 30, flip 30 into 30, hey, that's 100%. You buy multiple ones, of course, that's how you get the bigger bang for your buck. Let's say you buy 10 of them, well, you do the math on that, right? That's a quick little bag there, right? Quick little $300, plus in that perspective, right? Basically spend 300 to make 300, right? In that regard, no, from that point on. Right. So so it looks pretty good. It's gonna be the same for the call side. They still playing for that 470s. I'm telling you out the gate, they banking for it. Look at that. I'm just loaded up the 470s right today for the 470 strike. It was only $10 a contract, right? $10 a contract. I don't necessarily mean it's gonna hit it or not, but this is what they're doing with their money, their money. Right, the 468s, 50 cents. loading up there a little bit too. All right. So yeah, markets are, weird in their own way, but this is people doing just that we talked about today, assessing risk. They're assessing the risk perspective in this moment. All right. So that's our SPY scenario tomorrow. I know y'all be ready for it one way or the other. Right. We know this has been a long right scenario here. It's I see Sister Sneaky you're posting the links in the back chat. Thank you for that, Sister. Again, and that Bureau of Labor Statistics website, of course, just bls.gov. Let me copy it. I'll post that in the group too, or not in the group, but both, but in the back chat, I should say. We'll post that on YouTube just so GP. What's going on here on the YouTube side? Oh, Brother Ramsey in the building. He in there going in. Keep it about the business, Brother Ramsey. We are in training mode today. This ain't free will. This ain't free will live day intraday session. This is all training on Thursdays, family. So let's keep it keep it on the investment that side of the things on the Thursday. Thank you, Over Snotball, for the donation, family. Thank you for that. Honored and as always, humbled and honored. Always appreciate you, man. A million. You guys are awesome, man. Again, I tell you, we're trying to build something here where we get people excited about the opportunity to learn this stuff. Because again, look, we got to have something, right? We're gonna have to have something to pass on, right? And what is this? Somebody came in spamming us about some girl stuff. Y'all was on it though. Somebody got him. Thank you, brother Snotball, Snot brother. Got him. Right? It's crazy out there. Right? That's the first time I heard somebody spam my chat. That's the first. Somebody got some webcam stuff. All right, don't y'all click on that. Get in trouble. They wilding. But yeah, thank you everybody on the YouTube side. Sister Sharon, go subscribe to her Instagram channel. She's a Forex trader. All right, love what she do. Brother, everything in the building, always, getting that, that knowledge and they're on both sides, of course, culture and he picking up his investment knowledge. Brother Ramsey always coming through, showing love and doing what he do best and, providing some good content when he focused. Right, other thing to be cutting up. Brother Snotball, right, as always, he's definitely, a major force in this and he's learning a lot. Definitely appreciate him and what he's doing in terms of growing out his opportunity in this space and also mixing it into his profession, right? Over Marquise in the building as always, right, doing what he do best. Affectionate brother known as Crypto Kid. Shout out to Over Marquise. Ilba Tamika coming through the building today. See her in the house. Thank you as well, Ilba. As always, you always bring good dynamic value to the room too, right? So hope you guys build it, getting something from it, right? From the unorthodox day trader came through, right? Peace, power, and poverty as well. Right? Everybody, right? Brother Iori and Brother Dollar Will came through as well. Can't forget them. And our sister Play Hard Adventures in the building. Right? I'm just not saying this because y'all know, like Thursday is our training session. So I don't necessarily follow YouTube because I'm engaged in getting out the information. But we do open it up to people that may still want to follow along because you kind of get some on the backside, but it's more rated for the investment side of things. Structures, scenarios like that, purposes that we're trying to get out some information, right? More directive information than this kind of, going through the market free willing, as they say on the YouTube session. All right. So shout out to everybody. Thank y'all for tuning in. Thank you for your support. Again, everybody that's in the building here, the family that's in the training session itself. Hope you guys definitely got some out of it here. Right. Oh, this thing is, I forgot it's saying, what's the name? You got to stop it because it just be showing, flipping. Yeah, so Shanika, you got your hands up. What's going on, Ilba? Before we get ready to get out of here, what you got for us?
Thank you.
Okay, it's open. Go ahead. Mm-hmm.
Thank you very much for everything that I have learned and you've been consistent with keeping me abreast with. I do have to say though, tomorrow, please don't let me miss the bag. I was denied by
What happened?
It's not funny, but I reached out to Chris because I think I seen him in my my lineup on my Facebook, and I didn't think nothing of it. I said, hey, could you show me how you actually what's the process of doing a a call and a put right, like just to be a little more anal with what I was doing, because I was like, I really think I was absolutely lost. So what I told him, he was cracking up, and he said,
Well, you know what I'm gonna say first out the gate. You still at the preparatory learning stage. We got to crawl before we walk. I know you want to jump out
Just
there and
don't
get to the
go over here,
bag,
man.
but
"No,
you
but
know I'll
Nah,
be
wait,
the first
no,
one
but
to
wait."
tell you we
I
got
was
to
20.
take our
He
steps
honored what
carefully.
you said. He said no. Oba said no. I was like,
See,
what? Like,
see,
what? I was
see,
like, what is going on? I said, what is going on here?
see,
I was like, okay,
see.
this is how you learn in the spider web in the Ubuntu village. Okay, all right. I'm gonna tell on myself. I'm going back to tell on myself. I was like, but what? I was like, okay, but tomorrow, okay, if I can, I don't know what I gotta do, but please, 2 seconds, $2. Where can I put it at? Literally.
Well, no, again, this is the whole part of our learning, right? Because you know my mentality, right? We don't give fish, we teach people how to fish, right? And we
Yes.
want you to carefully know how to do it because see, the one thing about this stuff that makes it great because, of course, you know, you already, like I told you before, you're already a fast learner, which is great.
Yes.
What makes this stuff, in my opinion, this is my opinion, really, you know, have that kind of stickativity aspect of the opportunity because you see it happening because you see people around you maybe engaging, you see people making money, may hear about people lose money here and there. All you know is that okay, it's a turnkey opportunity because again, that really barred me from the opportunity to access it besides knowing what to do, right? That's power in a sense, right? Because you would say to yourself, okay, if I'm gonna bake a cake right for my babies, right? Now, are you gonna use 80 parts baking soda to 2 parts flour? Or are you gonna use 80 parts flour to 20 parts of what baking soda, right? Right? You try to serve them kids all baking soda, you're gonna have a problem in that house, right? You don't want them problems, right? they're gonna tell that, right? So it comes with understanding the creation process of why we want to walk you through it methodically. But in the meantime, this is where the self-learning education aspect of it kicks in on your part too. We call it autodidact for a reason, right? You've taken this information and building on it in your own, free spare time, right? The more you can become more familiar with the landscape, the more confident you're going to be about what you can and can't do. Because the first thing, if you ever come out, out the blue and you say to yourself, I don't know what to do. I don't know what I want to do, but I want to do it. Then in that moment, you're supposed to do what? Not do it, right? After over, you will say, don't do it then, because there's still more to it that we need to be confident about before we go out there and do it. Make sense? So it's a well worth the wait. Trust me when I tell you that, right? I wish I had Sister Camille on tonight because she'll tell you, right? That sister was in training for what 8 to 9 months, right? And she used to come in almost like every other month. Like I think I'm ready to open up. Like we ain't ready yet. We ain't gonna do real money yet. Let's get on the paper. Let's stay on the paper trade, right? Because she was getting all the building blocks same way we doing with you. You got to get those building blocks, understand the rules, right? The lanes, know what you're dealing with, all the moving parts, and then you can practice with it, right? That's the whole point of paper trading, right? Because you can still trade the market in real time, but you're doing it with monopoly money, of course. But it's better to assess risk by figuring out a lot of the the intraday aspects of what markets are doing, and use that aspect of again the paper aspect of it to get a feel for exactly how to be able to do it if you had real money. You see what I'm saying in the market, right? If it is $2, right? Or a $5 contract, right? Because $5 contract can make money in the market. Of course, we know that, right? We happens all the time, right? Done it. We all done it probably at some point for those who are really into that option side of the house. And you catch the market in the right moment, you can get that liquidity flush or liquidity ramp. You could really turn that into something nice, right? I've done it. Like I said, we've done it. Whatever. But again, it's the knowledge, right? That we're very keen on here, right? Because I think knowledge saves people from a lot of mistakes, right? At the end of the day, right? At the same go, if had I only known, right? If was a fifth and all that stuff, right? That's what we want to be purveyors of here. And we definitely want to make sure that when you get it to the extent where your confidence is superseding that to your convictions of being able to make these decisions and also be able to take this information and pay it forward, because you're going to teach this stuff to your babies. Yes, you are, right? You're going to teach this. You already probably giving them ancillary aspects of it now. You're going to teach this to your peers. You're going to be able to share it because that's what we're all trying to do here actually as well. We're trying to build a community of people who are from all walks of life, who have different perspectives, and it doesn't matter. We're here for the growth and the opportunity, right? That we couldn't necessarily get in other aspects of, America's government, because they got what? They got targets on our backs, right? And targets on our chest because of what? Our skin color and all this stupid stuff, right? It's stupid, but that's the world we live in. Markets separate you from that. Because when you on your computer, on your cell phone, your laptop, your tablet, they don't know who you is. They don't know who Miss Leno is. They sure don't, right? They don't know nothing about you, what you got, what you don't got. All they at best market makers and a couple people that understand how to read level to all that, they might just see an order come through, like, oh, that Miss Leno, they don't even know that's you. Right? You might be coming through to clean the house, So that's exciting because you have anonymity and you have the ability to pull down an unlimited cap value of potential profits if you could be in a position where you can do that. Make sense? So we want to keep building on the things that get you in a position to know how to deal with a technical analysis thoroughly, how to assess a fundamental analysis thoroughly. And then from there, the different aspect of the asset class, of course, if you're using options trading, it has a lot of different moving parts. So remember I told y'all like maybe weeks ago, months ago, I like get on that YouTube and start looking at pulling up those options for beginners traders, right? Let's get in the mind of saying, okay, I must put away at least 10 minutes for myself today. This 10 minutes is for my knowledge discovery. I don't care how you do it, when you do it, you got to get into the mindset yourself. This is my time, all right? This is my time to engage my my knowledge and thought process, right? In this lane, right? Because you already do other stuff too, of course, and a lot of other people do. On here, y'all get what I'm saying when I say that. You gotta start finding time for yourself, because that extra free time on top of these sessions like this, trust me, it works wonders, because it's going to increase your interest level. Make sense? Because you can like, oh, I remember that, I heard that before. Oh, this makes sense because I've seen that before, and then from there you'll begin to say, okay, it's starting to make sense. I can connect the dots. I'm connecting the dots now. It makes sense. Oh, this what this is. Oh, this what gamma is. This what delta is. Okay, this is what an option is. This is what this is what a caller put. Oh, this is what a downside risk, hedge and this and all that terminology, stuff like that begin to make sense, right? You with me there? Right?
Yeah.
The option flow, the order flow, right? Option flow charts, IVs, and like if you say that stuff to average people, like, man, what's that? That stuff you put in your arm? Like, no, that's actually implied volatility in stock options, right? Now you gonna shoot yourself up with that, but it was my real IV. But see, that's terminology. Make sense?
Yes. And I've been doing that for a while. I probably share more information than I apply and look at. To the point that I, would really be able to teach it back, which is a shame. But I'm being
No, it's
honest.
not. Well, again,
And
as they say,
not,
sometimes you learn through osmosis, right?
no, for real.
When one teaches, two learn. Yeah, think about it.
The thing is that I went and tried to do that on a small scale, like you said. Well, you said don't do it, but I thought you just meant like don't do it with the larger money. So I was doing it with the
No,
smaller
paper
money.
trade, because you still
But
learning, right?
I was trying. I don't know what I did, but I wound up with a dividend for $5. So I don't know what happened, but I was trying to buy a call.
Yep. See, jumped on
No,
out that window.
no,
Jumped
but
on
Hold on,
out
what
that
you
window.
do? What she do?
okay, no, I'm gonna stop
What
right
she
here.
do?
Jumped out that window.
She jumping out the
Tomorrow,
window.
no parachute, no nothing, but I'm
Yeah,
gone.
okay.
All right, that little meme I put out there while that joker jumped in that water with hands to the side, I'm gone, bro. I'm out of here. I'm going for it. What?
Oh,
You
I,
ain't,
I,
you
I
not
tried to
paper
tell
trading?
Chris. I tried to tell Chris. I said that's what I'm trying to ask for your help for. Like, yeah, I was trying to do it on my own and learn from experience.
It's process,
So I don't know what happened. I was like, I don't know what happened. He was like, no.
Chris,
That's the answer right
Chris, you
there.
let her do this?
See?
No, I didn't let her do that. I told her not to do it. I
Yeah,
had to
you said
explain
no.
to her what.
See?
Yeah, I was
That's
like,
No, but I already
no.
did it. I already did it at that point. Then I was coming to him to try to fix it. Like, okay, what
See?
did I do wrong? And
Yeah, when she was
what's
talking
going on
about
here?
dividends, I was like,
And he was like, what? He was like, what
So
happened?
you
And
bought
I
the
was like, look, I
stock
can't tell
and
you.
got a dividend off of it, or to the system? That's what you think what happened? Oh, that's what happened. Was it a dividend, or you just got profit? Do you happen to know particularly?
It's I don't know. I know I made a transaction, and then I just was like, all right, I'm gonna leave it alone. Whatever happened right now, I'm gonna go get somebody to check this out. That's all I know.
Yeah, we have to slow walk that a little bit so we can help you unpack it. You know.
Did you spend a lot of money for it, or
No, shoot.
was it a stock, or what did you buy option?
I know $5 came out, and that's all that was gonna come out. So whatever.
So you're saying you spent $5 for the like a $5 contract you bought. Basically, it's like you spent $5.
At least I thought I bought a contract, but then the next minute it said dividend. It said in my email you have a dividend for $5, and it actually went up.
Let me ask you this: do you bought it through your Stash account, or you used your Webull and Robinhood? What platform did you buy it through, or acquire?
I don't have a Stash, so it had to be through the Robinhood, and I wound up putting
So it's you use Robinhood basically.
Yeah,
Robinhood
I don't have account set up to it because that's what I was trying to do, and it was like
here's the deal. If you don't have an account to fund it, then typically when the first time you sign up for your Robinhood, you typically get free stock. They give you a free stock. I don't know how much it was worth, whatever, but you should know. It'll show you. But you might have had already been, playing with the free stock that they gave you for whatever value it was. Now, whether you used or you didn't, or you sold it or you didn't, and use that money to do it, I don't know. I'm just paraphrasing, but that'd be a scenario where I have to like walk you through it, like what happened, what was your step. Now, this is good too because see, in this moment, see what you're doing. You're paraphrasing your way through it a little bit, but you need to know specifically what you did. See what I'm saying? Right, the fact that you don't, that's problematic. Make sense? That means your risk assessment here, everything we've been talking about tonight, far as assessing risk, that could have been very problematic.
Extremely risky.
Up there, you've been in a Tesla with no steering wheel, right? You got all that power with no steering wheel. Good luck, right? Right? You did like a little racing car. So this is why this is a good moment to realize now why we go the way that we take the road that we take, I should say, right? The slow and steady, because you're trying to learn how to literally plan out your future value, financial value through this lane, at least by, learning all the things that you can about it so you can make the best informed decision you possibly can with your money. Does that make sense? Yes. So it's worth the wait in a lot of ways than you would think of it, because I remember I asked y'all in the very beginning, like when I asked you too, I said, do you think the stock market going to go away in the next 5 years? Or maybe the next 10 years? Next 20 years? Do you think they're going to shut down stock market maybe the next 50 years?
Next 20 minutes.
Man, it ain't going nowhere, right? Because everything wrapped up into it. 401k, pensions, payouts. So in essence to that, where you may feel like you're like, oh man, I'm missing out. You're not really missing out. Why? Because you're gaining something way more valuable than the idea of even money at that moment. You're gaining what? Knowledge. Right? It's the only priceless value that you could ever acquire, because it puts you in a point of what? Willing and controlling what? Power. Right? That's why we say knowledge brings power. Power equals what? Profit. Right? So I need you to get in the mind of reciting that, because it's important, because you got to make your brain accept the fact that in order for me to, have the level of power that I need to be able to turn a profit, I got to get what first? The knowledge, right? Because that separates all the what? What they call the ambiguity or the confusion, right? Dang, I ain't know what to do. Get what? When you know what to do, you be like, look, like if I come to you for your profession, because you got to say, if I came to you, try to come in your realm, I'm like, look here, you ain't even ready. See, I got my little stuff too. See, if I come to you like this right here.
You got him scooting in the chair. You done messed up.
If I showed up, right? See, you got me all in my little trick bag over here, right? I'm in a little trick bag, right? If I showed up, you trying to talk all this stuff, and you like, man, look, hold up, let me show you how to do that the right way. You don't know how to access that. And I'm like, see, look, you ain't ready. See, I'm ready. See, look, you ain't ready. See, I got that. See, you be all on my back, like, boy, you don't know what you're doing with that. You don't know what you're doing with that.
Blue gate.
Right?
We don't do that. We don't do that, so we don't have to beat you down and get your confidence low. We just show you through steps that you ain't ready.
That's raw.
I go to pull out all.
We're really trying to save you.
Right?
We're really trying to save you.
Okay.
We done lost money.
Yeah,
Reeling back in the fishing rod.
But see, that's a part of knowing, like over Chris saying, and everybody was, that's a part of us trying to make sure we protect each other, right? Right? Because it's like the Under Armour commercial. How that saying go? Will you what? Y'all remember the commercial back in the day, the Under Armour commercial. What that commercial used to say? Will you what?
Will you what?
The old Under Armour commercial that used to come on a lot. Where my Under Armour, my shoe people at? Y'all remember that old commercial that used to come on? Matter of fact, let me go to the back chat. Y'all, let me go. Where my YouTube fan? What the YouTube fan?
Trying to think about
YouTube
it.
people know.
Yeah, I had to think about that one.
Y'all remember that old Under Armour commercial? Will you protect this? What? Remember they used to play? They were slapping the pad in football and getting all pumped up for the winner.
Oh yeah.
What did they used to say? What was that mantra? Will you protect what? Will you protect this house?
Oh yeah. Whose house? Our house.
Right? But look at him. Y'all see, y'all finna make me go see, because y'all see, y'all know I am. Right? Y'all know how I am.
He said, yeah.
Right? The Under commercial, right? Where that one, what was that one? Right here. Can y'all hear that? Can y'all hear it?
No, can't hear it.
Y'all can't hear it?
No.
Oh, I forgot. I got this thing. I forgot how to do that stuff. I supposed to hold on. Let me try.
On deny.
Right, a straight no deny. I'm talking about send it back to the drawing board. Let me see if it'll play it now. Hold up. Let me see. Can y'all hear it? No.
No, we still can't hear it.
Oh, I see now because I'm playing it through an earphone. Ah, dang it. I gotta get in the habit of
switching over, right?
Let me run that here and take this over here. That's what it is. And I gotta go ahead and get that little relay switch for this thing so I can be able to make that quality be just right. Just right. Let me come over here real quick. Y'all see, I'm gonna play this here, then I'm gonna go get me some KL raps and some zoom zooms and wham, right? Cause y'all gonna get this work. Y'all gonna stop playing around and act y'all ain't ready for this. Cause I know we built for this. And y'all be acting like y'all ain't built for this, but we built for this. Y'all see that right there? What that thing right there say? Can y'all see it?
Yeah, Under Armour, protect this house. I will.
I'm gonna blast it too.
This is combat training.
$2010. I ain't gotta play all of it. Y'all get it. That commercial, back when it came out in 2010, it went viral, right? Because it was all over TV, right? They had cut it and made different segments. This was the full version of it, but they cut out and made like football segments. They did the one for Michael Phelps, a little swimmer, to run all the little medals and all that mess. But that's essentially what it's about, right? Again, this is us protecting what? This is us protecting our house.
Each other.
Right?
Financial house. Yeah.
Right, our financial house. I gotta have, as well as y'all gotta have the utmost value to want to make sure you protect each and every one of us that's in here, right? By making sure we have sound and proper information, because guess what? It's a real world outside them walls where y'all at right now. It's some sharks sitting out there right now outside your front porch waiting on you, right? They're waiting, boy. So it's serious out there. So we're trying to play not only catch up, but we're also trying to play what? Sustain and growth, right? Growth and perspective of that. So again, this is why, I'm of the mindset. Well, again, they say teach a man how to fish, he'll eat for a lifetime. We want to make sure we get it right. Don't necessarily mean we perfect. We don't claim to be nobody perfect. We're not gurus. We're not All these people y'all see all over the net be all over the place. Look, we ain't trying to show up and just take pictures next to Lambos and all that stuff. Look, it ain't about show for us. Not again, not that y'all can have that, but at our age, I'm just speaking. That's not our our assessment, right? 'Cause a lot of us got family, we got kids, we got we trying to think in a way that we can do this methodically. So, in saying all that, time is actually on our side. We had the little saying it's a marathon, not a sprint, right? It really is, because what you've been able to learn thus far in a certain time since you didn't got to this, you're already leaps and bounds a lot of your peers already. A lot of this stuff that meaning those who don't talk about this know about this. If you try to have a natural conversation about some of the stuff you already know about this, that's still gonna go right over their head. They're like, "Girl, I don't know what you're talking about. Girl, where them stones at? Right? Where them crystals at? Right? Hey, where them crystals at? I ain't got time to money. I got a jog. I go to Mr. Charlie get my money." And you be like, "Okay, all right." So that's the difference. So you're learning how to now utilize the value of it in a way where you're going to be able to reap the benefits when it's your appropriate appointed and appropriate time, right? Because you're going to have the level of conviction, right? And there's no rule to say since you got this skill set, you can't do nothing else. Like, that's silly. Everybody on here got several different skill sets and professions that they do outside of this. It makes sense? So it's not like it just devote everything you got to this. You can focus intent-wise because, yeah, it can give you some good payouts too. But ultimately, it's not going to negate everything else that you got going on in life too. You just got to figure out where to carve out time for you and say, if it's 10 minutes, if it's 15 minutes. I had this one drill do it. One of the people that's going through sessions with me, I got her on 2 minutes. She was that kind of person. You was that busy. I like, if you can't find 2 minutes for you, I like, you right. I get 2 minutes. So guess what? That 2 minutes, when you get ready to do them 2 minutes, send me a text message every time before you get ready to do it, right? Because that way I know at least in that moment you serious about that moment. If it's just 2 minutes watching a 2 minute clip on YouTube about some investment value, that's time well spent. I guarantee it.
Oh, I took training extra. I have YouTubes on it, and I still went to go do it and was like, doink. I will literally,
because they're telling you don't go out there try to do it. It's about you learning all the aspects of it first before you jump out. You're supposed to try to follow along.
It's like I'm getting the harder concepts easier than I'm getting the basics. The harder stuff is clicking for me. I get it. It's the simple stuff, like
so in that moment, like I said, it's gonna take some time. Don't rush it, because you're gonna benefit on the back end by being patient. Then the idea that you have a persistent learn, that's the good part, right? You have an interest. That's a lot of people, they want it, but they don't want to do, as they say, they don't want to do the work, right? That's why they're saying also that investing in trade is not a lazy man's game. That's one of the biggest mantras in the investing world. Investing in trade is not a lazy man's game, because you're gonna have to put in the work. But the work that we do is stuff that people do already every day. They sit around on YouTube and Instagram and Facebook searching for likes and smiling faces. I'm like, no, we use our cell phone to get a bag. We read information, we get news publication, we get alerts on this, on that, and like, oh, that's actionable intel. I might come work with that. Think about that. Make sense? So we're already doing the same thing that most people already do, but we're just surfacing a different canvas of a platform or ideology, but it's all relevant. Why? Because it leads back to a potential a potential bag, right? That's the difference, right? Somebody getting emotional happiness, payout through whatever they do. For us, it's like, okay, we finna catch this stock that's finna drop, right? Or the stock that's getting ready to rocket, right? And that, $10 or $20 or 100 plus, $500 finna turn to now 600,000-700,000, whatever, right? And that stuff is happening in relation to you mapping out real time, you watching it, and you watching your P&L just turning over money quickly, and you ain't doing nothing but just watching it. Ain't no nails being broken, ain't no elbows hurting, ain't no backs hurting. At most, your eyes might get a little bloodshot red, because you sit there looking at the screen like, well, that money really working, but I think looking right about it, you might get bloodshot red eye, but that's about it, because you sit there, so you focus, you don't want to miss nothing. That's the extent of this.
I sure do. Can I watch one of y'all tomorrow?
Well, yeah, if somebody if in the chat, well, of course, if they around, no, they ain't a crazy question. That's it. Because if somebody intraday trading market and they're available where they can do that, yeah, you know, by all means, you know, hop on the Zoom with them if they allow it. But that's why I say that's what their group is for. That, you know, it's people from all walks of life, right? And the goal is that we're just trying to make it welcoming to anybody, right? Because we want people to feel comfortable in the aspect to learn. We still adults, of course. We know how to approach people, of course. You know, we do it in respect and love and all that. But if people got the time, you know, and they ain't, you know, really, you know, worried about nothing, then yeah, so be it. Yeah, they'll probably do it. And if not, it's crazy because guess what? YouTube, matter of fact, on YouTube, there's people that be day trade all day long doing a market hour. Matter of fact, we post what's the one what's the guys over there with Neil and Sean? What's the little show they got? Yeah, been on this several times. I mean, you know, not posted. What's the group guys over there? Y'all know what I'm talking about.
I know what you're talking about.
Y'all know what I'm talking about. Sean and Neil, them guys.
You talking about the guys that trade in Canada?
Yeah. I keep forgetting the name of the doggone their little channel.
Trade Live TV.
Yes, it Traders Live TV, right? Neil and Sean them over there.
Yeah.
Right. They all they do from 8:30 to 10, they're day trading the market in real time. Real time. So you can see exactly what people are doing. Now they're doing, of course, common shares equity. They're not doing options, whatever, but it's the same kind of understanding of what you're seeing, they're seeing, right? They're talking you through it. They're showing you, you know, those preparatory steps that they're taking, and this, that you're getting all the information, the jargon, that again, in terms of the language, in terms of how they making things make sense, right? This is why I'm buying here at this resistance. This is why this company just did that, and the third at here. This is being the point where most people are starting to kind of sell it at here. So this must be the stock is getting tired and exhausted, getting ready to probably pull back a little bit. If that's still gonna start making sense to you, psychologically, you're like, okay, I've heard that before, I've seen it. Yeah, that makes sense. Mm-hmm. That's all this stuff is. It's just a bombardment of information. Eventually it begins to stick. And then after that, you begin to be in a position where you can act out on it. Right? Like, okay, I got you know, I've been trained, I've been paper trading, I've been getting used to doing stuff. Cause matter of fact, what was the account? You got Robinhood, right? Yeah, you got Robinhood. You don't got Webull. So Webull got paper trade, but you can get a free one. I sent you to the site to get the free one. I think a while back, investorpedia.com, they got a free simulation too, where you can paper trade on it. Right?
And you know what?
Options and common shares. And that don't even require your bank information and stuff, like sign up for a broker. That's just straight on the website. There's others too that you can do that. I think Ninja Trader got one, and a few others. You literally sign up with your email, stuff like that, and they'll just let you use the paper trading feature just on the blue without even signing up for a brokerage account. Which that ain't a bad thing anyway, because brokerage account don't want them but your social. Make sure you are, and you got access to be able to make money. So yeah, so that's just a way to look at it. From that perspective, I would say, again, like we've been saying, of course, in that downtime when we're not going live, having sessions like this is when you kind of do that. Don't be afraid to ask those questions. If people are available, they'll try to help, right? They're going to help. And then it also kind of stay, close to the information. Once we talk about it, take your notes here and there. If it's not mental, write it down. That's why it's on YouTube now. So you can go back and replay this on YouTube. Make sense? Or any others, you can just go and just let it kind of turn over in your head over and over and over. The more you hear it, the more you're gonna be able to act on it. I guarantee you. All right. So let that continue to be the guide for you, because I know eventually you'll see that you're not, the fruit of what you're gonna get out of this is coming. It's coming, but you're gonna have to again. You trying to go from kindergarten to college overnight, right? You just jumped out of off the big wheel right into the Lambo. Like, I want to go Ricky Bobby style. I want to go fast. Get your grandma station wagon. She go, man, don't you get in Miss Mabel station wagon? Don't you do it? Right?
Snap.
But you get my point. You'll get it. You'll get it eventually.
I think it's 2 weeks or 2 days. Something you put in, you were waiting for, you're gonna be really, really happy about and make a nice amount of money on. Just sharing that with you, and happy birthday. I didn't forget about you. I just wanted to do it really nice, but it's getting to be a long time now past your birthday. Either way you put it, I celebrate you every day. So I just
appreciate that. I see that.
Yeah, mouth to ear. I'm gonna make sure I peel you off when I
as well. Again, a lot of y'all know how I am with this.
I appreciate
You
you
know,
much. You're very
outside of what
genuine.
we do and the structure of it, even on that side of it through the training, and for me, a lot of this is I'm excited to be able to share it, right? Because again, as I always I say, when one teaches, two learn, and in the aspect of that, when you having people, if they even have the lapse in moments when they do a payment, and I get out it look as well, because I'm here to again to build up my family, right? Period. What that thing is, when you protect this house, we got to get we got to get our people excited about something more than just world star hip hop, reality TV show, shoes, clothes, pocketbooks, and wilding, right? Not that's not all black people, but you get my point. If the
Yes.
majority of our people figure like that's solace for them, meaning that's their comfort spaces, right? Be it indirectly or directly, we need to try to find other ways for they can decompress some of that other energy into things like this, right? Because they got the tools to do it because they buying all the product. They know what's going on. You gotta learn how to connect the dots. Like you're saying now in your case, how to make sure you use an investment brokerage app, properly. What are the steps that you need to learn before you be able to, break down a chart, like a technical analysis to make a fundamental perspective, and also learn how to utilize that into what? An investment strategy or a trading strategy. That stuff ain't far from where you think it is, right? Again, it's all in the preparatory stages. You'll get there. You're gonna get there, right? Just stay humble, stay hungry to the idea because you got the hunger. The information, it's gonna force you to learn it because that's how the markets are. The markets are a proving ground. You've probably heard that saying before. It is a proving ground here, right? Because one or two things gonna happen. You're gonna get better by being patient and going through the steps and learning it, methodical way, or you jump out there with real money, and then what are you gonna do? You may hit a couple times, get like, oh, I got this money. Then sometimes you're gonna be like, what? Oh, they wiped me, it got me. I ain't know what I was doing. It took all my little money. Then you can start, you like, okay, I can't think about it from this perspective. This is definitely not gambling. This is strategic.
Oh no.
Right? They done took all my little, my little Oreo cookie money. Right? I ain't gonna eat tonight, no sweets tonight. Right? Jumped out there with your little zoom zooms and wham wham money. They done took it all that. Market maker to take all that. All right, let me get that. You don't need them cookies. So that's a part of with the game where we're trying to make sure that we don't go that route if necessary. So I'm saying we want to protect you
I
from
don't want to
that.
go that.
You
So
in the
your money
morning,
can work.
because I definitely have to do this when I wake up. Because if I don't do it, if I wake up,
Take again, Sister Angie. I think her mic just opened up. Yeah, she right there. Okay, yeah. And that happens sometimes. Make sure. I just want to make sure somebody might come on and say, "Hey, baby, what you? Hey, don't leave. Hold up now. Put you on mute now. Hold up and put you on mute. Don't do it. It's on YouTube. It's on YouTube. Boy, Joe will be like, "Hey, take that. Can you take that off YouTube?" No, but y'all get it. But that's it. So I'm gonna get ready to get out of here, guys, so I can go get me my dinner. I want to be done early, but we go a little extra because it's family, right? We want to build that out. But does that make sense, though, so Sneaker, what we're saying here?
Of course. Look, I'm gonna find a way to harass y'all. I just don't want my feelings hurt. So that's why I'm probably
No, but see, this is it because you're learning something, right? So it should not.
Yeah.
That's why we talked about earlier, right? One of the biggest things about what we do is we absolve ourselves as feeling because this is not about feelings, right? Finances don't care about your feelings. It'll hurt your feeling when you ain't got none, core. But this is a game where we're trying to build something up. So guess what? Psychologically, you trying to understand the effects of how money can, affects people, right? Two things I always say: love and money, right? Makes people get out of their little, getting their feelings real quick. If you learn how to keep your emotion in check when it comes to making good financial decisions, right? Or on your quest to get it, that's right there is a power unlike anything. Because that's what it takes. See what I'm saying? Yeah. So that's what I'm saying. It's in that perspective because it's not personal. Like they always say, people say it's personal, it's not personal business. What's a mixture of both? And it's because you want to learn. But that's why we make the environment so conducive for that because we're not, you got respectful people around you, then you already know how they move, right? If they got time, they'll help. If they ain't got time, then they just ain't got time, right? Because they got a life going on, me, mile an hour running, and they like try to keep up and multitask. But it's there. So it's there that people will submit in that perspective when they can. And then it's not we got material, we got videos to send you to. We got a plethora of stuff, so you never be without information.
A lot
right?
of good material, and I didn't look over it the way I should have. I'll be honest.
That's all right, but you take your time.
But I'm talking about like applying it, like really getting it. I couldn't teach it back. I did look. You gave a lot of good information. So yeah, I just don't like. I don't say I know something until I can teach it without looking at it, and until I know it in a way where I can teach it to someone so that they can apply it. Then I won't say I know because I know.
Makes sense. No, but it's time. Like I said, but you keep in mind, you're not going to learn this overnight. Yeah, yeah. I first want to tell you that you don't get this overnight.
I'm
Now,
not
I know
perfect.
people that are very fast learners, and they can, they'll jump out there. We talking about months though. We ain't talking about no just 1 week, whatever. Some people out there just built for that, and they devoted a lot of time to learn it though. But that's a person that went deep diving into this though. You ain't finna beat that person work ethic. That's why they got it bad. Cause they probably up night, at night binge learning and training while people sleep. They spouses sleep, the kids sleep. They just in what binge mode, like college all over again, like you cramming for a test. And they just took it like that way, just aggressively. I don't know. Right? I came in like that. That's literally how I came in. I used to just stay up all night. So, I mean, one time I was up like near 48 hours, no sleep. And I was in my, I had locked myself living in the basement, right? Everything I need down there, what I'm saying, my little basement, full bathroom, workout area, TV, all that stuff surround. I put myself in that mode. I wanted to get this. It took me back to school, and I was like, and I just got a lot of information, just videos and knowledge, and then I they say the third day I came up to rest, right? I was like building the planet. So came out looking like Al Green with a beard all over the place, looking all crazy. I don't smell no grits in here. I don't smell no grits cooking in. Right?
Oh no.
But that was my cycle. So everybody different depending on what they have the lot for time. But you got time. Keep in mind, people got time. People always say, I ain't got time. That's a story because I know what it takes. It only takes a little bit every day. We may give the majority of that to YouTube again or skimming Facebook, or something like that. Like, no, y'all ain't get that today, Facebook. This finna go to my learning. Right? It's that kind of commitment. That's discipline. You know what I'm saying? So it comes when it comes, but eventually you'll realize that it's no rush really more than you think it is. It's a marathon, not a sprint for a reason. It's better to know than not know, than jump out there on the ledge, right? And be like, what I do next? No, it's too late. You already on the, like going to the end of the diving board. Right? You ever been to a pool and just go to the high dive, you're on the end of the diving board and that line's still long, people waiting to jump. And you get up there like, I don't know if I want to do this. Like, dog, you ain't got no truck. I ain't finna get out the line to get. You better cannonball it. You better hit that cannonball and just hit that water.
You better be lucky you weren't in the mentorship course that we had. What 5 years ago? It's a lot of information. So
man,
be thankful. Be thankful.
We had data dumps.
I don't mind that.
This is a college class, so
my thing is just getting things intricately. Sometimes I'm a visual and a hands-on learner. So auditory, sometimes if you're saying something and you're going too fast, I have to slow down and I have to go, wait a minute, I need to process that. How does that apply?
That's why we record it.
I think several concepts at a time. So when you tell me one thing, I done went off to a tangent with how that could be several others. And so that's where
and I remember I told you that I think one of our conversations, I don't mean to cut you, but when we had that, I think our first discourse, when you first brought you on and your mind was just racing, I knew right there. I said, yeah, see, that's a good thing, right? But now you gotta learn how. Remember I told you, so you gotta learn how to compartmentalize all that. You gotta bottle all that energy up and channel it to the right proper places, right? Because you're learning literally how to ride a bike, but you've never been even probably exposed to a bicycle, right? You heard of the concept of a bike, but like, oh, now I'm exposed to it. So now I need to learn the chain, the sprocket, the brakes, handlebars, all this stuff. You start learning about the bike. Makes sense? You reverse engineering it. So from there, you say, well, let me flush out any kind of preconceived notions. Let me flush out any kind of implicit biases. Let me come in this thing as an empty canvas. Because I'm learning, right? That's the essence of that value. I'm learning. That right there eliminates all the pressure because then it's like, okay, I'm doing this and ain't no pressure on me in the timeline to get it. There's no timeline on this. See what I'm saying? If it took you a year, 2 years, 3 years, it still wouldn't matter. Tesla's still gonna be traded. Apple's still gonna be traded. All the other stocks still gonna be traded. Stocks still gonna be going up crazy number sometimes. Stock gonna be dropping because of crazy stuff. You know, that's what makes this stuff great. The time is only relegated to what you feel like you have to embark on. You get to pick and choose that. I don't. You do. Right? That's power. That's control. Right? You can't do that again on the job. You don't got time to stop in the middle on the job on the clock and say, "Excuse me, Miss Charlie, I got to read this dissertation and train before I go to do my outside stuff." He gonna look at you like you got that life, huh? You got the nerves, huh? You want to get fired today, huh? Right? So that's the part of this. So accept that, be excited about it, and realize that you're in a good place. Because number one, you're here. Could be anywhere else too, of course, but you're in a position where you're trying to gain knowledge. Make sense? And you got all the time to deconstruct it and realize the importance of it as you go through, back testing it against information. I already talk about something, you go straight to what? Boom. Wikipedia or a website. Let me look this up. I heard them talk about that. Let me go look that up, right? You replay it, okay, let me go look that up, right? And you just go back test it. You know what I'm saying? Against what we say, what we diagram, how we chart it. Eventually, more and more, it's gonna make sense. Trust me. So you're in a good hands.
It's a quote. I hate to use it, but it's a quote in the Bible. It said, "With all thy getting, get that understanding."
Oh yeah, old school, old school. Again, it has some. Bible has great principles in it. By all intents and purposes. And that's just a part of that. And again, one of the old ones back in the day, we see what the whole James scripture, right? Faith without works is dead. Right? So look. But see, the great thing about it, we're not running merely on faith. We actually, you got to put in work in this, right? You got to work in this one, right? Because if not, boy, it's gonna be like, well, how much you got today? You can be like, let me get that. The market will be like, let me get that. Market will be like, let me get that. Let me get that. Let me get that there. You ain't learned yet? Okay, let me get this here too. Then you still ain't learned yet? Let me take that from you too. That's the market gonna do to you, right? And you get to the point, you say, you know what? I'm ready now. I'm coming back to get that bag. I'm back. I got my game. I got my game. I'm ready. Girl, you can start doing market maker. Let me get that. You gonna get all that money back. You gonna get it all back, and then something. Make sense? So we don't want to lose before we can gain. We want to gain up here first before we can gain here first, right? So that's our course of action.
That's definitely
Real talk.
I have patience for it. I just wanted to know what buttons to press. That's all I wanted.
But see, that's why I say it ain't nothing wrong with playing with your account, learning it or the app.
Yeah,
before you get there, you just don't want to be doing it with real money. And if you got, if you want, I know people gonna do what they're gonna do because I can't tell you how to be an adult. That's your money, your scenario. If you're gonna do it, make sure you again understand the risk and then realize that whatever you have willing to lose, if you're gonna go out there and test drive it, then just be comfortable knowing that you did it under the understanding that guess what? I don't know enough to know what I need to know, but I'm comfortable and want to figure out at least how it worked through the process of it, right? Because if you don't have the preparatory knowledge to make it all make sense, of course you still stuck. You're like, I don't know. Here's a company, here's a stock, here's the buy button. At least I could do that much. I got this much to pay for it. I could buy fraction shares. I could buy a whole share. At least I know that much because that's easy, right? It's easy as using Facebook. How to navigate through Facebook. Make sense? But it's not the same in terms of understanding the importance, right?
I'm still learning how to use Facebook.
But you get my point. Any kind of app scenario, in that perspective.
I know what you're saying.
So you'll get it. So we're gonna keep working on it. We're gonna keep building on it. Stay patient, stay hungry, stay humble. We got information, we got knowledge, you got videos, you got, we got books, or PDF, whatever. We got things that kind of keep you engaged. In other words, meaning mentally focused on it, and then from there, it's gonna begin to slowly make sense. It's like Neo in the Matrix moment. I keep saying that. Y'all gonna see. Everybody on here go through that moment, or will go through that moment. That Neo in the Matrix moment when he figured out he was the one. That's when you know you there. And I'm saying that because you say, I'm all in now. It's starting to make sense. Now I just gotta build on this and keep going, right? Even though y'all get it. I'll be all there with my analogies and examples.
I know.
But that's it. So let me get out of here so I can go get me some dinner because y'all eating late. Y'all know I'll be turning to a gremlin here the next 2 hours if I eat late after 12. Right? So I need to get up for the market tomorrow.
I know.
So I can get after it. It is recorded again on YouTube, so you know how this stuff go. We'll post a link. You know, you can go find it yourself because I still have them open until we put them in, you know, in the unlisted scenario for the training scenario. So I have the link if you want to go back and rewatch it. Just focus on what we talked about tonight. The topics or the titles that we put into them are relevant to where we are or where we should always be focusing on, right? If it's understanding a trend or a channel or you know what this mean, what that mean, if it's assessing risk, if it's you know learning how you know to map your money out, like tonight's topic, all this stuff. We are gonna try to connect those dots best we can, right? So
Absolutely.
accept it in that regard. Like this is good, right? This is new. I'm learning how to ride this, you know, ride this bicycle. I got this thing, right? Got the Huffy, old school bike, yo, Huffy. That's it. So let me get out of here, guys. If there's any other questions, real quick before I get out of here. Anybody?
Thank you.
Anybody? Anybody?
Fine.
Anybody?
Jobless claims coming out tomorrow, right?
Oh, that was today. Job became with non. It was a non-farm payroll.
Yeah,
Friday's
that was
typically non-farm payroll. Let me see.
yeah, non-farm payroll. You're right.
Let me go over here because I ain't even check. Actually, I ain't got mine up right now because I closed out some of the stuff. Let me go and look at investing.com. Go to the economic calendar and see what do we have for us tomorrow. Of course, you go to investing.com and go to tools. Underneath the tools, drop down this economic calendar. That's how you kind of keep up with all that kind of stuff. As far as events, one from another. So tomorrow, Friday, American markets, we have, we got non-farm payroll. Yep, we got non-farm payroll, manufacturing payroll, government payroll. Of course, you know, the typical Friday after you have a big job numbers, and that was the numbers for the month too, because you know we did the October numbers this week, right? So that was important as well to the big numbers. So non-farm payroll gonna come right behind it. Yeah, so that's gonna be nice. Well, it's kind of running in conjunction of what we had today anyway. Right, because the market's definitely, you know, still running on bullish sentiment of the Feds, regardless if the numbers are good or bad. But anyway, we'll see. So non-farm payroll. So yeah, so that's it. So all right, so we ready for tomorrow, man. Oil is up.
Tomorrow, SPY is the ticker you mentioned that would do well tomorrow, right?
Not necessarily do well, it's just that this is an assessment. Keep in mind, everything we talk about is speculative. Everything we talk about is speculative. It's an assessment of risk. Everything has to do with markets. That's what they call them, risk assets or risk markets. They're an assessments of risk. They're just that's why I make the analogy that stocks are just no more than what they call investment vehicles, right? If you don't get attached to the investment vehicle, meaning for the aspect of what it really is, you can see it for what it really is. It's opportunity. That's on the trader side more so though. But you'll understand that this is about you putting risk in a bottle, right? And you're trying to make sure you know you can properly assess it, right? Through these different stocks in terms of where they at technically, what's their fundamental story if they have one, and what are the potential projections of where it can go, either up or down.
These are
right?
all returns, man.
Say again.
Oh, sorry. I was at work.
Oh, no problem. Yeah, so that's that's the way to look at it from that angle. It helps. I should say it helps assess it better from that perspective.
I was just making sure what I heard. I'm definitely not asking no more questions because I want you to go eat.
No, it's well. It's well. No, but that's it. Go back and replay it, and again,
yes,
back in the groups, whatever. We'll be there to kind of fill in the gaps wherever we can in that regard. But it's a lot. Keep in mind, you're not gonna learn all this overnight. I'm gonna tell you again, you're not gonna learn it all overnight. And I'll be the first to tell you, don't try it, right? Because you want your brain to be able to accept it naturally, as much as possible. Because if you try to fight it to learn it, you're gonna war with it. Why? Because you're gonna want it to make sense, and sometimes when it doesn't, it's gonna cause a problem, right? You're gonna have I'm like, right? That's the worst thing you can do. You want to learn things naturally. That's why we try to make the environment very nice and applicable. All right, put on a little Al Green. I keep saying Al Green, but it must be Al Green. Get your little 8-track, get your little Peebo Bryson 8-track, put it in, pour your little Dom Perignon, Chateaubriand, that Fred Sanford, that Ripple.
Oh my goodness.
You know what I'm saying? That Ripple, that old school, that Fred Sanford style, that special. Get that Ripple out the cabinet.
Artist, one of my favorite old school art, Al Green.
Yeah, so you can take your time and learn this stuff. it is some of an intimate relationship because this is money, this is finances, right? Who don't want to get better at their finances? So it's serious by all intents and purposes. Everything we do here is very serious. So because it's dealing with being able to provide, or at least grow what we have into something bigger than what than what we have into something bigger, right? So futuristic. So I'm excited. All right, so that's it. Again, I guess that's it, guys. Thank y'all for tuning in. Again, everybody on the YouTube side who follow along again on our training session on Thursday nights. Again, we thank you for your participation. Thank you over Snot Ball for the donation. I'm humbled by that. Thank you. I think everybody, Sister Sharon, Brother Snot Ball, who else I said? Brother Ori came through, Brother Dollar Will, Sister Play Art, Brother Everything is Everything. Of course, Brother Ramsey, Brother Marquise came through over there, and everybody else. Again, and then all the panel, right? All you guys here on the panel. Right. So that's it. So I'll see you guys back in the group. Gosh, I want to push for something this weekend because I wasn't able to do that last weekend because I really got bombarded, and we're supposed to use that Sunday. We didn't have a date, but Sunday. So what I do tomorrow as well, and I have a session in the morning, a training session. So what I do after I come off that session, I'm gonna go live on YouTube. I'm gonna do a YouTube live session, and then hopefully, gosh, I want to say something. Push for Sunday. We could do another day session. I'm gonna push for it. All right, but I'm still getting things in order because of what the whole household scenario in that regard. So, but yeah, I'm gonna do a live tomorrow though, doing after I come off that training session I got in the morning. So we have a little back. So if you are hanging around, during that time of day free, you'll see me on YouTube. We'll be talking about some of the same stuff, in real time what the markets are doing, so you can see it in real time, right? So you can see it. So if you are around at that time, Sister Shanika, definitely you'll be able to see it because I'll be right there talking about it. Right, this is what's going on right now in the market. All right, so we can assess it. All right, that's it, guys. So I'll see y'all in the next one, guys. Peace, power, and profit. Go get some rest. Go relax. This stuff will be recorded again. Get the link out. You can go back and watch it. I hope it was beneficial. As always, I try to provide some kind of value of being able to kind of make you think and not just, kind of just go through the motion. This is a thinking scenario for a reason, right? So we can utilize this knowledge, right? That's it, guys. So I'll see y'all in the next one, guys. Peace, power, profit, everybody. Brother Al, Sister Angie, Brother Jeremy, Brother Brandon, Brother Rich, Sister Shanika, Brother David. Everybody came through. Sister Shanika, who else we missed? Sister Shonda, everybody came through. I know Sister Mo might be busy tonight. She went, but shout out to our Sister Monica Lamb, our sister, our financial battle in the arms, and everybody else, right? Peace, power, profit to y'all. We'll see you guys in the next one. All right. Peace, family. Peace, everybody.
Peace,
power, and profit.
Peace, family. Peace.